here, and the topics they said they will circulate. So based on the number of participants in the screening, we wanted to go ahead and send our contestants to indoor on a Zoom meeting only. So can we send
Zoom meeting.
can we send
Yeah,
an SMS for this for students to
yeah.
participate?
As long as it's a virtual meeting, it should not be a problem.
For
Good evening,
inviting
Pankaj sir. Good
participants for this.
Morning. 1 second. Na? 1 second. Just say Delhi ka call hai. Hello.
How are the things, ma'am? Fine? All good?
हाँ बोलिए बोलिए.
दीपक ये सेंटर्स का सॉर्ट आउट हो गया ना?
चल रहा अभी completely नहीं हुआ. Going on.
What we are doing is that whatever link we are getting, we'll share it with students. If they want to participate in a Zoom meeting, it shouldn't be a problem.
SMS सर ब्रांच का SMS स्टूडेंट बेस को भेजो बोल के चेन्नई भेज सकते क्या?
ब्रांच का
SMS लिस्ट रहता ना सर, स्टूडेंट्स का लिस्ट क्लासेस का
नहीं 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 उतना मत करो because they will charge us. Okay, so better what we'll do is we'll put it on. We'll do it through our WhatsApp login.
ठीक है सर, WhatsApp, Insta, YouTube.
Yes, yes, yes. That should be enough.
Those platforms only.
पैसे नहीं है भाई आपके.
वो भी सही बात है. That's also a very right thing.
Acha, Deepak Rajam, I have personally spoken to Justice P.P. Bhatt, and he looks to be a very nice person, and he has agreed to join at sharp 5 p.m. on Saturday.
Perfect.
Namaskaram, Mahendra Reddy sir. Thank you. Every day I first open and see you are there, and then my program will start. Thank you. Welcome, Manisha, Vishal, Shilpi, Dharamdev Garu. Okay. Dhananjay, Ashish Kachwa, Mohammad Altaf, Arpan, Srividya. Okay. Thank you all for joining on time here. दीपक पे सतीश नहीं आ रहा. ओके, टेंशन मत लो, मैं कर लेता हूँ.
सर आप इंट्रोड्यूस करें ना गणेश सर को.
हाँ मैं कर देता हूँ. इंट्रोड्यूस का नाम नकल हो ना, इंट्रोड्यूस बोले कि नहीं बोलता तो मैं इसको हैंड मोटो सॉन्ग के बाद मेरे को हैंड ओवर कर दो. विल टेक इट. राजम, वी आर हैविंग मोटो सॉन्ग.
Yes, sir.
उठना है. I think
Yes, sir,
yesterday
yes,
you
sir.
are not there. We have to get up.
I know that, sir. I've seen it in the chat.
Yesterday, yeah. Santosh, I think we are ready with the motto song.
Yeah, ready.
हाँ,
मेरे को स्टार्ट करना है. ओके, मैं अपनी मॉर्निंग अलग बात हुई थी. ठीक है, चलो डन. ओके, मैं रेडी हो जाता हूँ.
morning we wanted Machara to come and do this opening remark, but Machara is not there ना, तो कल जितना करे आप उतना ही कर लो ना. नहीं नहीं आपको प्रॉब्लम नहीं है, आप लोग ऑफिस में है. राजा एक बार दीपक का कॉल लो.
हेलो पंकज भैया, संजय हियर. आप म्यूट पे हैं. हाय एवरीवन.
संजय जी, गुड इवनिंग. संजय सर. कैसे हैं सर?
Good evening, sir. Good evening, Rajambal Garu and Manu Garu.
Good
Hi.
evening, Sanjay sir. Welcome. Thank you. Thanks for coming.
इतना formality मत कीजिए sir.
अरे sir.
गुड इवनिंग भानु सर.
Good evening, Banu.
Right. So I'll keep myself off for now. आप जब
Yes. एक बार मैं आपको ये welcome Ganesh. I think Ram, did you give the share screen powers to the speakers?
Yeah, I have given to all panelists.
Yes. Thank you. Thank you, Ram.
संजय भाई नमस्कार.
नमस्ते गणेश साहब.
अरे वो दी पोएट
Empirical Ganesh sir, welcome, welcome. वांग.
पोएट
स्क्रीन पे.
गणेश जी आप तो मोटिवेशनल मैसेजेस एवरी मॉर्निंग आर वेरी गुड.
गुड इवनिंग गणेश सर.
वेरी वेरी गुड इवनिंग. साहब आज तो आपका कंपटीशन आ गया है भानु साहब.
आगे
आपका तो गया आज गियो आज.
ओके ओके
आपका तो गियो. भानु साहब आज पूरा डायलॉग नहीं मारेंगे. अभी ऑडिट करे हो ना आप करो बट डायलॉग तो मारेंगे.
मानो सब डायलॉग ने गाने पुराने गाने गाते.
अच्छा बाय द वे राजम्बा वेलकम ऑन बोर्ड टू ICI seminar. I've seen you for the first time.
That is what I thought. How did Ganesh just say a hi? I was waiting for this audit observations to come out.
शाम के टाइम पे गणेश फैक्ट्स ही बात करता. राजम उन्हें ऑफिस में नहीं है तो आई थिंक
only audit observations. Only
ऑडिट ऑब्जर्वेशन है बस
for Ganesh.
No, see, for the 100th, you have to do 98th if I'm following. Right from May, I've been following, just imagine. कितना follow up किया होगा मैं?
See, Ganesh, you are very, very tech savvy. You can follow everything. Okay. For me, working from home was like working at home. So I did not have a difference.
Very interesting conversation. We'll keep it later. But working at home, I thought you work at home only, right? Office is only incidental.
Incidental that I had to work from home, no? That is why I could not manage.
Sanjay bhai,
other income.
Sanjay bhai, it's all your show.
Office is other
It's all
income.
your show. Okay.
Sorry, Ganesh. I missed you. Sorry, say that again, please.
It's all your show. Okay. I've
Okay.
just stepped in for Vijay. So आप जितना रॉक करना कर लो भाई. हम
Okay.
जितना तमाशा करना हम कर लेंगे.
Right. And I request all these panelists to ask as many questions as possible so that we can, drag
Hey,
it.
Sanjay, don't
कमी
ask.
नहीं है. गणेश देखा भर के आते.
Sanjay, don't ask those things. So,
I think that is one of the ways to, kill the time, right?
hey, what are you saying? I thought you already killed the time, yeah. See, what we should give it to Banu. He will do the flowery introduction. Give it to Ladda Saab. Ladda Saab will give you about history. Give it to Rajambal. She will play music to the tunes. Give it to Pankaj Bhai. He will do all the honors. Hey, Daya is not there, but अरे दया रहता तो conclude कर देता था सब कुछ. Anyway, you have got excitements in the later part of the time. When you have all the big people joining you. Hey, but you've not put
बड़ा राज समझ में नहीं आता. कंपनीज एक्ट ऑडिट पे अपना जिंदगी चलता.
हाँ.
जीएसटी बोलते अभी कल 180 हो गए थे 10 मिनट पे. आज अभी 85 के
काय को बोले तो जहां पे पैसा दिखता लक्ष्मी दिखता वहीं तो जाते. भाई आप क्या बात कर रहे हो? आप ऐसा क्वेश्चन पूछ रहे हो. ऑडिटिंग करो.
Lakshmi here, no. Rajam is a Lakshmi. People should know that.
No. Rajam is a Lakshmi here, but they find Lakshmi when they do GST work. No, but I told you, right? Auditing is a very dry subject and an unknown terrain. Because it is supposed to be in your blood. That's what they say. Audit is in your blood. GST is a new learning. So you should have actually put audit and GST. Probably you would have more people joining.
Yeah, I think
the word GST is a magnet, sir. It is a magnet actually. The word GST is a magnet.
True. Income tax, GST, anything on treasury, anything on this, all like that only.
It's a magnet.
Yeah, quickly what we'll do, we'll start at sharp 6, come what may. People will join, and just I'll have a 1 or 2 minutes welcome. Hand it over to Ganesh. Ganesh will give the opening remarks, and then we'll introduce Sanjay Bhai. And then Deepak, who is introducing Sanjay? Mute pe aap.
Sir, treasurer, ACS.
Acha, ACS is also, yeah, ACS has joined. Welcome, ACS. Think of 100.
Good evening, everyone.
Yeah,
Sir,
so
thank you,
after
sir.
Ganesh sir speaks, we'll finish off that memento part to Ganesh, virtual memento. Thank you to Ganesh.
Hey,
And
no, मेरे को नहीं चाहिए. Hey, memento is only for the speaker, not to
तो
the.
थैंक यू नोट है ना, memento नहीं है, और वैसा भी दे रहे क्या रहे, हम बता रहे क्या नहीं, बताते अंदर डाल लेते. Okay, and after that you introduce Sanjay sir, and you'll take around 7:30, which MPV sir is joining, and you can take. Ganesh, you're most welcome to be here throughout the session, but I virtually forced you and requested you to just join in your busy schedule. So even if you leave, you can come back also if you're busy. But I'd love to have you with us throughout the session.
पत्थर भी मारा, सब टूट गया, ग्लास भी नहीं पड़ा, सब टूट गया अभी.
I was about to say that.
भाई मार दिया, सब कुछ मार के बोला, I still love to do.
I was just about to say that.
आज क्या है, वो भट्ट साहब से बात करने को बहुत प्रैक्टिस करा रहे, तो वहां पे क्या हो गया, एकदम सीधा बॉल जाके विकेट पे लग गया. The moment I called, he says, हाँ पंकज त्रिवेदी, tell me, I have been hearing. मैं कितना डायलॉग्स लिखा था उसके पहले, पूरा टुस हो गया, तो मैं वो यहाँ मार दिया तेरे ऊपर.
अरे ग्लास की जिंदगी में जी रहे भाई, तो ग्लास फोड़ना तो पड़ता ही.
Correct, correct. Sanjay bhai, quickly I will welcome, leave it to Ganesh. After Ganesh, ACS will introduce you. We leave it to you. Whenever MPV sir comes, he'll wait you finish your speech, and then MPV sir will be introduced by Rajam, and they will take over.
Sure.
So question answers, we'll do it at the end. Yeah,
Yes.
it's 6 p.m. sharp. Okay. So thank you.
Oh,
Good evening, everyone. I welcome you to day 3 of the program, Powering Ahead Century on a Sticky Wicket. And friends, this is the 98th program of this committee since 14th February 2020. That is the day in which we are taken over. And if we are doing any program for ICA, auditing is the most important part of it, and we cannot afford to have program without having the topic of auditing. And unfortunately, the moment we talk about income tax, the moment we talk about GST, I will have 300 people, and I get worried about YouTube link and all these things. For audit, yeah, I have about 78 people now, and I'm sure it will move on. But I request all of you to join early, even for the audit programs, because that will encourage us to have the best of the speakers. Otherwise, I'll have to cut a very sorry figure in front of Ganesh and Sanjay Bhai, who are one of the excellent resources available to us in Hyderabad. So what I'll do is that I'll not like to waste time, but if Ram Kumar is here, I would request Ram Kumar to share screen. But before that, I welcome CA Ganesh, who would be giving the inaugural address, CA Sanjay Jain, who is the speaker of the day, and my colleagues in the managing committee, Banu Narayan Rao, Deepak Ladda, ACS Reddy, and Rajam, and all the 88 participants who have joined till now. Friends, this is an official program, and we are trying to play a motto song. So I request you now, Santosh will be sharing screen, and as and when we start playing the motto song, I humbly request all of you to stand, because it is a basic respect we need to give to our own motto song. So may I request Ram Kumar to kindly share the screen first, so that all of us can stand and then.
यशस्सुन्देषु जाग्रति कामं 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 कामर्षो पुरुषो निर्विमानः निर्विमानः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते अमृतमुच्यते तस्मिन् लोकः शतः शतः सर्वे तदूनाच्यतीतश्च नान्यतीतश्च एतद्वैता 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 एतद्वैता
Thank you. Today, we are having a session on navigating accounting and auditing challenges in the new era. We have with us CAB Ganesh, who is a partner in audit and assurance practice with 26 years of experience and is the office managing partner for Hyderabad and Vijayawada office. Ganesh heads the learning and development for South Asia Center cluster for Deloitte audit function. Ganesh is a part of IFRS faculty with ICA, was co-opted member for several committees of ICA as well as SIRC of ICA. He's been involved in preparation of implementation guide on materiality, sampling, and going concern released by the Accounting and Auditing Assurance Standards Board. He is associated with the Quarterly Review Board and Peer Review Board set up by ICA. He is also a CPA from American Institute of CPA. He is a regular speaker at every academic forum all over India and is a great asset to ICA and especially for the Hyderabad branch of SRC of ICA. Ganesh doesn't like to be introduced, so I did not use the word, let me introduce Ganesh. I knew he will stop me. So I straight away started with a very abridged version of Ganesh introduction, which will itself take one session. So Ganesh, over to you for your opening remarks on the topic.
So thank you very much, Pankaj, and thank you to all the members of the executive members. This is today's day is of Sanjay. So let's hear it out of Sanjay. So therefore, you will not be talking about. So I was quite surprised. I'm just a step in, just because Vijay Kumar was not around, and therefore I thought it was very nice of you and Daya to bring me here on board. But otherwise, I'm just a surprise package as far as this is concerned. Not to take away the limelight of what I would want Sanjay to deliberate, but surely you're absolutely right, babe. We already hit 100. That's why I keep telling you, Pankaj, don't worry about it. We'll always touch the three mark. So when we talk about the financial reporting and navigating through accounting and auditing challenges, the branch has been doing a lot of sessions relating to that. In fact, when you also heard on the GST, in fact, I went through the GST audit, GST return, they were also talking about auditing. When we were doing forensic, they were also talking about auditing. So therefore, the auditing is in our DNA. And one of the biggest challenges that are coming through, and which is not seen before, is that no longer we can go and live under the shadow of auditing standards or the accounting standards. Today, the expectations from the users are, because you say that one side you say we're all moving towards the digitization of all of the tools. We have got the best of the tools, best of the auditing tools. Now suddenly you come back and say, I will do materiality, I will do sampling, I will do all of these. All of these will undergo change. So there are changes which have come through significantly, which has come through post the era of the Ind AS. The Ind AS is a significant change. The key audit matter or the critical audit matter is a key change. The COVID reporting per se, if you were to look at the whole accounting has changed. It's completely changed the manner in which we used to do auditing. Even that has undergone change. Even the procedures that we follow for a physical verification of an inventory or an observations or going to the client and getting the vouchers, that has undergone change. But what has not undergone change is our responsibility. Our responsibility, the moment we affix our stamp onto any audit report or any financial statement, whether it is a COVID period or not a COVID period, we are responsible for the opinion that we have issued. So we need to be very, very clear. I mean, somebody might say, whenever Ganesh comes or anybody, Sanjay comes or any other speaker comes, they always put fear into the minds of the people saying that, why do we need to do audit? Why do we need to issue a report? But trust me, see, today, there could be big firms which are facing this. Tomorrow, when Nefra is going to take over, they're not going to come to the way the QRB is doing, where they come to your office and do. They're going to sit in their office, do all the review and send it across to you. I think that is the extent of where we need to start focusing. It is not that our audit method, the manner in which we do audit has changed. It has not changed. It is the expectations from the users of the financial statements have undergone change. That's a very, very key change that one should look at it. The second aspect of it, COVID has actually disrupted business. We cannot just close our eyes and say, this is my auditing standard, these are my accounting standards, and therefore I will apply auditing and accounting standards in the same business which was there last year and current. It is not going to be the same. Our approach towards this audit will be different. If you are in an Ind-AS regime, you have a different perspective, like whether a fair value or an impairment. If you're an Indian standard itself, somebody might keep on asking the question whether we can provide depreciation, whether we should overload all of these. Just think through this. Many of the companies has availed what is called a moratorium of loans, and the loans can get extended to any period. But what is you're not understanding is, the more you extend the loans, the interest just gets piled up. When the interest gets piled up, your financial ratios goes away, your covenants goes away, you're meeting that expectation. Because what happens when you defer a loan, when you defer prepayment, you're actually loading yourself with more for the future. So therefore it is important that as an auditor, what we need to be very cognizant, it is not about accounting standard. It's not about auditing standards. It is about knowing the business, knowing the industry. Suppose you've been auditing jewelry. Suppose you've been auditing, let's say, any of the trading companies which are dealing, let's say, could be a restaurant, could be textiles, could be automobiles, could be anything. Just look at that. When the economy has gone down to minus 24%, when the economy is downgraded to go back to 9%, so we are talking about some businesses which are going back to 2016 or 2015, how do you audit it? The manner in which the businesses are conducted have changed, because earlier it was physical delivery. Now you could have gone, you could have felt, you could have shopped, and you could have built and you could have got it. Today it has changed. It's everything online. All of these will add to the efforts that the auditor should put in. And I think that is what is very, very important. Now look at the changes that are coming through. Look at the financial reporting per se. Today, what we are seeing that, when we had the last session on Caro, itself requires auditors to look at more expecting from the auditors. When the auditors' expectations have gone up, the financial reportings also would go up. So therefore, it is not about what we have done in the past, but it is about what we are going to apply in the future that becomes very, very important. Whilst I would ask Sanjay to talk about, everybody knows an auditing standard, everybody knows an accounting standard. When do they really feel the pinch of it? If you're subjected to a peer review, if you're subjected to a QRB, if you're subjected to any of the inspection or investigation by any authorities, it's at that point in time you feel, whether did I miss in a documentation, whether I missed in the application of an accounting standard, because you don't, and this is a continuous process. You have an IBC, you have an IBBI, you have got companies which are going sick. All of these finally get translated onto the auditor who has issued an opinion. And when you see the forensic report which came up in the last time when we had a speaker discussing from Mumbai, he's talking about 1.86 crores of fraud and 1.86 crores of fraud in national banks. When you have such the magnitude of fraud, and if you are auditing a bank, if you are auditing a company of that which is involved in a fraud, imagine the amount of pressure that as an auditor we would go through it. So therefore, what is very, very important, it is not that we do not know. It is not, because please do not sign any document without receiving a letter from engagement letter from the client, without getting the information from the client. Don't ever go and sign saying that I want a certificate tomorrow, I want you to sign. Suppose you don't sign it, some other person is going to sign. Please do not accept it. It's not worth it. In fact, some of these disciplinary stories which some of the central council members are talking about 60 years person who's facing a certificate which has been issued. Just think through this process. You also will reach that 60 years mile point. At that point in time, when you reflect back, will this have an impact on you? I think what is very, very critical for all of us, please lay emphasis for whatever we do, whether it's in auditing, accounting, tax, GST, even why GST, take the case of GST. Now, even in a GST, you could still feel once you issue a report, even there also, you could still have a possibility somebody coming up and saying that the report that you've issued went through a survey or a scrutiny, it can land into a problem. So what is emphasized even in a GST audit or in a GST seminar that I had attended 5 days, they were talking about documentation. I think it is in our blood, lifeline, it is in our blood where audit and documentations go together. And if we have people like Sanjay, who's a reflection of the experience, who's a reflection of the knowledge that he possesses by auditing many of the companies in and around Hyderabad, I think no better person than having Sanjay on board to talk about this, because end of the day, what I see is a mirror from this side, but he's a reflection, the other side, who will be deliberating on the foresight of how the auditing accounting standards and how does the reporting standards would look at. I don't want to take the limelight which Sanjay is waiting for. It's all your show, Sanjay. Please go ahead with that. Thank you, and I hand it over to you guys.
Thank you, Ganesh. Your presence itself adds a lot of light to the screen or the hall or wherever you are. Ramkumar.
Bhaiya, ek hi baat bol raha hu. Just because Banu, we are all there, don't say weight has gone up. Don't say that.
Ramkumar, can you just share the screen, please? Okay. And Ganesh bhai, thank you very much.
Thank you so much, bhai. Thank you.
In a virtual thing, we could not have done best than this, but I promise you, ये frame होके दूसरे certificates के साथ मैं खुद आपके ऑफिस में आके देने वाला हूँ. But you have to wait till normalcy restores.
No. This is now Sanjay show. Please go ahead with Sanjay, please.
I know that. Thank you, Ram. You can just close it. Thank you, really. Thank you, Ganesh bhai, for the words of wisdom. I'm honored by your presence today. And may I now request A. Chinnasitaram Reddy, Treasurer, Hyderabad branch, to introduce Sanjay bhai, and then Sanjay bhai can take over from there.
Thank you, Chairman, sir. It is my privilege to introduce. Sir, I am able to audible?
Yes, you are audible, sir. Go ahead.
Thank you, Chairman, sir. It is my privilege to introduce Mr. C.S. Sanjay Jain ji. C.S. Sanjay Jain is associated with the profession for over 2 decades and presently is a partner in Walker, Chandik and Co. LLP. He is also playing leadership role for Southern region as a regional assurance leader and leader for consumer sector for South. His primary area of expertise has been assurance and advisory services and dealing with complex accounting, besides being an astute in identifying and reporting on financial frauds. He has served the clients predominantly from sectors such as healthcare, life science, education, food and beverages, and general manufacturing. He was co-opted member of the Auditing and Assurance Standard Board of the ICA. He was member of the Financial Reporting Review Group of the ICA, and he was member of Finance and Taxation Committee of the CII Hyderabad chapter. Sanjay is actively involved with the ICI on knowledge sharing initiatives and has also trained professional members on the IFRS diploma course. During his association with the Auditing Assurance Standard Board and thereafter, he has contributed on the guidance note on fraud reporting audit of internal financial controlling systems, and also assisted the Auditing Assurance Standard Board in redrafting the CARO 2016. This is a brief profile about today's speaker, Sanjay Jain sir, and it's over to Sanjay Jain sir.
And Sanjay, just before you start, we are all here. I'm not moving even an inch from the system, but just keeping my video off because of this bandwidth thing. And anything, I'm here only. बस आप आवाज दीजिए मैं हूँ. You don't worry about the chats. Okay, I will be answering the chats. And I request all the attendees to kindly put the questions only in Q&A so that Sanjay sir would be able to answer it easily. If you put questions in chat, then I'm sorry, we may not be able to take it. Over to you, Sanjay bhai.
Thank you so much, Pankaj Bhaiya. Am I audible?
Yes, sir.
Yes, perfect.
Okay, great. So before I begin, let me just, as a matter of courtesy, I must thank Ganesh for his kind words about my experience in auditing companies in this part of the world. So Ganesh, thank you so much for that. That was very inspiring. Let me begin with a big thank you to Hyderabad chapter, and especially Pankaj Bhaiya, to you for having me here with this group on a very, very important topic. In my view, it's definitely a very important topic, and even Ganesh emphasized on that in terms of what is the relevance of this topic in today's world. So thank you so much for having me here with you. Also, I must acknowledge that, one, obviously the topic is very important, and also given the fact that this is the 98th, I would say, session that you're conducting against your goal of 100. So it's definitely a matter of honor and privilege to be part of this such, discussions and such events. And especially when it is towards the end of it, it becomes all the more important. So if I may, just draw the analogy of a cricketing or a cricket match for that matter, the players, the batsmen, and especially Pankaj Bhai, you would appreciate this. Players who are involved and contributing in run winning or scoring the winning runs, they are more valued and they enjoy the more privileges. So I think I'm part of that. So thank you so much, from that perspective as well. Now let me just come to the topic very quickly, friends. This discussion about navigating through accounting and auditing challenges in new era. This topic, Pankaj Bhai reached out to me almost about a week ago. And you won't believe that, the minute Pankaj sir said that, I need to take up this topic, I guess without even a blink of eye, I said, yes, I will do this, because this is a topic which is very close to my heart. And this is something I would feel very, comfortable in terms of talking about, especially in terms of what's happening in the kind of environment that we are living in today. Uh, Throughout the session, I guess you will realize that, I'm not going to touch, or I'm not going to talk too much about the technical subjects. I'm not going to talk about any specific accounting standards or auditing standards per se, but I'm just going to share in terms of how, as a professional, we should be able to navigate through the difficult period that we are encountering right now. So when we had this discussion, clearly there was no guidance or definition of as to what do we really mean by the new era. See, the term accounting and auditing challenges, it's easy to understand, comprehend. It's yes, what do we mean by that? There are issues with reference to interpretation of accounting standards. There are issues with reference to interpretation of auditing standards. There could possibly be issues with reference to implementation of these standards. So that's pretty easy to really appreciate and understand. But I guess what was not very clear is in terms of what exactly we mean by the word the new era. And that's where there was no clarification. I have not really asked any clarification from Pankaj Bhai on this, and I thought I will leave this to me in terms of making a judgment as to what is the new era all about, and I must define this for the members' benefit in terms of what I really think about a new era, from our perspective. So moving on to this, and since I had a liberty to decide in terms of what exactly the new era is all about, I thought I will define this, and I'll just explain. When we talk about a new era, normally we believe that there's a sea change that has taken place. So, for example, if we draw a reference to say Companies Act of 2013, 7 years ago when this was issued, most of us, I'm sure a lot of chartered accountants and a lot of corporates would have said that, it's a beginning of a new era because there was a comprehensive overall change that has taken place as far as the Companies Act is concerned. Possibly one can say, yes, at that point in time, it was a introduction or a dawn of a new era. But down the line, 7 years do we still believe that the Companies Act is something which is a challenging issue? I guess I personally don't think it's a a major concern right now. I think the dust is well settled, and we are in an advanced scenario right now in terms of interpretation, clarification, and I think both the institutes, be it ICAI or IC, the Company Secretary Institute, everyone has done their bit in terms of making sure that they obtain all the necessary clarification from the MCA from time to time and bring out all the possible amendments along with working with the business and commerce bodies for that matter. So I wouldn't really say that the Companies Act is any longer is an area where we need to really worry about it at this point in time. So if it's not Companies Act, then what next? Is it the Indian accounting standard is a challenge for us? Again, here personally, and some of you may disagree with me, and please feel free so, but I personally don't really believe that Indian accounting standards, or Ind AS as we call it in a abridged version, is also not really a big issue at this point in time. This started way back in 2007, 2008, when there was a first time there was a plan to introduce it effectively from 2011 onwards, but then it got deferred. And around that time also, there was a lot of preparation that took place. Many of the chartered accountants who are participating in today's session must be aware that there were a number of seminars, conferences, training sessions were conducted at that point in time. And even when this was reintroduced in 2016, effective from 1st April 2016, a lot of efforts have already been made. We are 5 years down the line in the process in terms of the implementation, and all the listed companies are complying with this, and there are several other companies who are implementing Ind AS on a regular basis. So in addition to that, you must be aware that there is a separate body within ICAI, it's called ITFG, which they issued the interpretation standards on various technical issues which are involved within Ind AS. And there are a number of clarifications that have been issued so far, and I must congratulate the ICAI for that matter in terms of the initiatives that they've taken in coming up with various clarification on a timely basis. So I guess I personally don't believe that Ind AS is also as a new era that we're talking about from now onwards. I slightly have a different view as far as that is concerned. So if it is not the Companies Act, if it is not the Indian accounting standard, what else? Then is it the next thing could be new professional standards on auditing. I mean, Ganesh alluded to this particular point that there are several auditing standards that are being issued. But again, there, it's not going to be a complete overall change as far as the auditing standards are concerned. They are for individuals or the members or persons in profession who are familiar with the auditing standards, they will not find it very difficult in terms of making or a right interpretation of the revised standards. And revised standards have been issuing from time to time. It's not something which is a complete overall change that we are going to see going forward. But of course, yes, as Ganesh said, there will be changes. There are going to be, new requirements that are going to be presented to us. And in this same context, if you look at, there was a new revised code of ethics that was issued by the ICAI in the recent past, very recent past, and effectively applicable from this financial year onwards. And they have introduced a comprehensive change as far as code of ethics is concerned. But these are all in the normal course of our activities. These changes will keep coming on predominantly from the perspective of bringing these standards up to the level, up to the standards of meeting the current requirement. So there are again regular changes that we will see on a day-to-day basis. And again, I personally believe that this is not something which we are talking about a new era. There's something else. So if it is not the Companies Act, it is not the accounting standards, it's not the auditing standards, then what else could be the new era that we're talking about? And that's the reason why in the beginning I said, this is going to be a different session. It is not too much of a technical session in terms of the accounting and auditing standards. We'll talk about as to what this new era from my lens, and please feel free if you have a different view on that to let me know on that. Now, let me just bring in my perspective as to what is this new era is all about. It's important to know. And the reason why I am having this particular slide from a discussion point of view is that unless we define this new era that we're talking about, unless we know very clearly as to what are the characteristics of this new era, it will be very difficult for us to design our process to navigate through this. And therefore, I have, in my wisdom and based on my experience, I've identified few points which we'll deliberate and discuss at this point in time. I think before we get into this risk of assurance, let me just also give you some more perspective. We are increasingly, and all the members who are in practice, and especially with a focus on audit, and colleagues like Ganesh would have seen this more often than not, that in the recent past, most of the colleagues that we work with are worried about this profession. They really think whether is this the profession that we want to continue? Is this the profession that, or is this the kind of life that we actually expected post passing chartered accountants examination? Is it that we really want to do in life, where there's so much of pressure and there's so much of negativity that is moving around in the environment that we work in, and that is actually leading to a situation where a lot of people are discouraged to come to the practice, right? So that's the kind of a environment that we are living in at this point in time, and I'm sure this is the experience that most of the chartered accountants must be having on a day-to-day basis, and that's where we find it extremely difficult in terms of having a right staffing for the engagements that we perform. So given that kind of a scenario, the first thing that I talk about in terms of the characteristics of this new era is the risk of assurance. Now, let's spend a minute on this. The term assurance. The term assurance means that we as an auditor, when we sign a financial statements, and when it goes to in the hands of our users of the financial statements, it in a way provides them a assurance that the financial statements are materially complied with accounting principles and they're not materially misstated, right? Now, today, it's a very common knowledge that most of us, after signing the financial statements, we feel that we don't know whether everything has been properly taken care, or is there anything that has been left open that can come back and haunt us at a later stage. So we are living in an environment where we believe that there's a risk of giving an assurance to the users of the financial statement. And this is a very commonly felt, I would say, attribute at this point in time. And I'm sure most of you would agree with me in terms of the way we are experiencing the current scenario. The second environment and the second era, the second attributes of this era is a large number of audit failures. And I don't think any one of us would have heard the number of audit failures that we have heard in the last 1-2 years. In the past 20 years, wouldn't have seen something like that. Now, what it really means that increasingly, either through use of a whistleblower policies, or through use of or whistleblower mechanism, or through the other means, a lot of audits or the fraudulent corporate financial reporting is getting discovered, and that is leading to, in a way, a lot of audit failures. And in my own experience, I'm in this profession for last 20 years, but the number of audit failures that we have witnessed in the last 2 to 3 years is significantly higher compared to what I would have seen in the last 20 years. And this is happening either due to frauds in the financial statements that we audit, or is it because of possibly errors in the financial statement. I think the major cause of the audit failures is because of fraud, and this fraud are predominantly perpetrated by the management and attributed to the auditors to say that why they have not in a position to identify such audit failures or such frauds in the financial statement reporting. Now, it's a different topic altogether to discuss in terms of, and debatable topic as to who should assume and take the responsibility for this. Is it we as an auditor and the management, and the is a joint responsibility, or is it only the management? That's a very, very debatable and controversial subject. We will not touch upon that. But when there is an audit failure, the first person that gets what you call identified, or a question is asked as to who is the auditor of that particular company, right? As though auditors have assumed a responsibility to really do a forensic work on the engagement and not doing the audit work alone. So that is another, very significant attribute in terms of the era that we are living in now. And that is causing a lot of mental stress to practicing chartered accountants and even otherwise for that matter. Ganesh also talked about inspections. There are large number of inspections, QRB inspections, there are peer review inspections, and the intensity with which the inspections are taking place are also a cause of concern. Not so much. I don't think anyone is worried about the fact that they are subject to any kind of inspection, which is actually important, because it in a way creates a healthy environment for the professional to practice. Because if there are any shortcomings, possibly you will get to know. But I think what is really causing a heartburn or a stress is that individuals or practitioners are worried that whether we have everything in our files to demonstrate and support our audit opinion that we have issued. And the increased number of inspections are also in a way causing, and this is going to be the reality of the life. It's not that it's going to go down. This is how the new era is going to function. In addition to that, there's a new kid on the block. I don't want to, and of course we all know it's NAFRA, and the way NAFRA is performing the reviews, and there are currently only about 2 or 3 reviews that are out at this point in time, or only one entity with multiple firms. But I guess one thing I must appreciate, again, the conclusion of NAFRA is something which is debatable. I don't think any one of us are in a position to really say yes or no that everything what they're talking about is right or wrong. That's absolutely a different aspect of a discussion and judgment. But I guess if if you have read the reports of NAFRA, you will be surprised to know that the level of details in which the NAFRA has gone in terms of reviewing the work papers and the files of the auditors, right? And we're talking about firms where the documentation is so strong and they have so much of information that is available. Despite of all that, the number of observations and number of the level of detail in which they have gone is unbelievable. I wouldn't have, if suppose you asked me to do an inspection or a review of a file, I don't think I would have gone into that much of detail with that much of greater detail. But I guess it's both good and a bad sign. Good sign in the sense now we are at least aware that there's someone who is going to perform on a very, very effective oversight on our work. And bad thing is that if supposing that we're not really up to the mark, then possibly we'll be pulled up by the NAFRA for the quality of work that we're doing. So that is another thing which is describing the current scenario. The last thing on this particular slide is, and this is very important, is that ever increasing or ever widening gap between the expectations of the users of the financial statements versus the reality, right? I can tell you, I've come across a number of instances where people have come back and said, for every small mistake or even if larger mistake, the first thing the management or the reader of the financial statement will ask is that, what is that the auditors were doing? None of them are realizing the fact that there is a management which has a significant amount of responsibility in terms of accuracy of the financial statement, in terms of completeness of the financial statement. If you read the section 134(5) of the Companies Act, which basically talks about the responsibility of the management in relation to the preparation of financial statement and the internal control system for that matter. But the awareness about what is the management responsibility is very, very low. And the first thing that happens, and the expectation is that no auditor should have identified this. Now, what is that we as an institution or as a individual practitioner can do about it? Very little. I don't think there's a much that we can do to change that perception. And this is going to be there for many, many years. But so we can't really change the perception of the common man or the user of the financial statement. But what we can certainly do is plan our audit in such a manner that we minimize such instances. And that's the idea of this discussion in terms of how do we navigate through these challenges. Now, once we talk about, and this is what I had identified in terms of how the new era should be defined and what are the key characteristics of the new era. I may have not covered everything, quite possible, because this is based on my limited understanding of it. There could be a few more aspects, and I'm not getting into the introduction of new accounting standards or auditing standards or new technical standards for that matter, because that's, I believe, I know that everything is evolving and it evolves along with the evolution of the business and evolution of the e-commerce and things like that. So that's anyway part of it. But I guess the new era from the lenses of the professional this is what it is. We got to be careful in terms of our audit opinion. We got to be careful with reference to audit failures. We will be subject to several inspections, be it by QRB, be it by peer review, or now NAFRA, depending upon the nature of engagements that we audit. And the expectation gap is beyond our control to bridge that gap. People will continue to believe that it is the auditors who are responsible to identify, discover, and report the fraudulent transaction in the organization. So these are the reality. These are the new reality of the life, right? Now, the next, I think what is important to know as to how did we reach to this particular stage? Are we responsible or someone else is responsible? And the reason why I am bringing up this particular point from discussion is that it's important to know as to why did this happen? Why this public perception about the auditors have changed? Why is that, we as an auditors are now feared or scared to sign the financial statements? So there's something must have happened. Either we are responsible or someone else is responsible. And once we know as to what is the really root cause of such situation, I think then we will be in a better position to really address and the concerns that we are talking about. Now identify and evaluate some of these aspects which has led to this particular situation. And again, I'm just adding a disclaimer here. This is not necessarily a exhaustive list of issues. Possibly some of you might say this is wrong, or some of you will say this is incomplete. That's perfectly fine, but just trying to lay out some of the key aspects of it. Now, this new era, or the new perception that is hurting us, is one of the reasons is high profile audit failures, right? Now, irrespective of that, what is the auditor's responsibility, or what is the responsibility of the management or the audit committee for that matter, and without even waiting to hear from the auditors. But I guess the first, as we talked about, the first reaction would be is that if there's an audit failure, it is the auditors who is responsible. Now we need to think through in terms of what was our role and how we missed in terms of preventing such situation, and learn from this to protect and prevent our future interest. The second aspect, and this is very important, and possibly I'll spend a few minutes on this. We need to ask ourselves: there is an inadequate amount of professional skepticism that we apply in carrying out our audits? And one of the fundamental thing in performing the audit is applying the concept of professional skepticism. And there's a word called smell test, right? And it says that there is no guidance for a smell test. It is purely based on the experience of the person who is carrying out the audit, that they need to ask what you call probing questions to the client or to the client personnel in relation to transaction, and apply the level of skepticism to identify if there are any potential concerns. I guess the current scenario, and this is with most of us, is that we are all pushed in a rat race, and possibly in that kind of a scenario, our focus would be to see as to how quickly we complete the audit and move on to the next work. And in that process, we possibly miss out in being very careful and cautious in terms of performing our work. And I clearly believe that lack of adequate professional skepticism is one of the fundamental and key reasons for, if there are audit failures, one of the key reasons is the lack of professional skepticism. What else? The next point which I have identified is possibly, in most of the cases, we are all, as I said, the focus is in terms of how do we position ourselves to a particular level, right? I feel proud to call myself as I'm a fifth largest accounting firm, I'm a fourth largest accounting firm. So is it something that, we have made this audit as a Game of Thrones? We feel proud to be crowned as a number 1, number 2, number 3, number 4, number 5, number 10. And in the process, again, when we are focused on winning those numbers, when we're winning those positions, it's quite obvious that we would lose our focus on the key and critical aspect. And it's just not that we will lose the focus on the key and critical aspects. It is also possible, if suppose something is being highlighted to us, we will get into a mode where we will try to rationalize, those transactions in a way, justify those transactions and move on. And I think this is one of the most riskiest situation. If I'm pushing, or if I'm pushing myself, or I'm just running for a particular number game, it's quite likely that my focus on audit, the quality of audit, will definitely go down. So that's another thing that I believe possibly has led to this kind of a scenario. Complacency, that's another aspect. I think it's quite natural that people who are connected with the client for a long period of time, or individuals who are overconfident, quite possibly they'll believe that I know a lot more than anyone else. And we tend to ignore the red flags that are clearly available to us, and that complacency leads to a audit failure or a low quality of audit for that matter. Excessive reliance and trust on management, this is another problem. This is something which is very commonly seen, that we, as an auditor, because our focus is to win clients, our focus is to win the positions. We tend to believe on what management is saying, whereas what we need to do is exactly opposite of that, right? While client is important to us, a lot of people ask this question: who is paying your fees, right? It's your client. So you need to be thinking about their interest. The answer is absolutely no. while the client is paying the fees because of that's how the system is set up at this point in time. But that doesn't mean that I am working for the client or in the interest, solely in the interest of the client. So any amount of excessive reliance and trust placed on the management is again a very important and pertinent attributes for audit failures or a low audit for that matter. And this is, I'm sure most of you would be in a position to really link it and refer it to you to several situations that possibly we would have encountered in the past. What next? In the management philosophy, there's a term that has been used called FOMO, right? I'm sure some of you must be aware of it. It's basically known as a fear of missing out, right? So I, as a partner, as an audit firm, I am going through a possible thinking in my mind that possibly I am missing out on something, right? I'm not in this particular committee. I'm not known to so and so CEO. I'm not really making a lot of noise in the market. My reputation, my fame is not very high. Now, this fear of missing out is basically a competition to say as to how many of us are sitting on how many committees and how much well known we are in the market. That's another biggest problem with, especially with this profession. So there's nothing wrong. There's absolutely nothing wrong to play responsibility or assume responsibility for various roles within the profession or outside the profession. Absolutely no, nothing wrong with it. But then what is happening, and this is very important for us to know, is that when our focus is towards developing and building our own individual brand, right, the ability to focus on the audit also goes down in an equal proportion. And when that happens, we are solely relying on our teams. When they come back to you with the performance of the audit, we are solely relying on the work done by them without really applying the level of review and test and going ahead with the closing of those audits. Now, this is something which is again, causing a lot of trouble as far as the audit is concerned. So I felt possibly these are the 6 key reasons as to why possibly we have reached to this particular situation, right? Now, the question is, how do we deal with this and how do we navigate through these challenges? And I've just coined this particular thought: should we go back to the basics? Should we, let's go back to the basics, right? Whether that will help us in terms of dealing with the challenges or not, let's go through that. So that's what my next 3-4 slides that we will talk about is predominantly focusing on as to what we need to do in terms of going back to the basics. Now, when the Chartered Accountants Act was passed, I'm not going back to the old 1949 and all that, but I guess there was one term that was coined, and I'm assuming it was there way back in 1949 when the act was passed. And the term was that we chartered accountants are partners in nation building, right? We would have heard about it. And when we say as to we are partners in nation building, I think the individuals or the professionals who were responsible to draft the code of ethics or the act, they came up with this idea and said, okay, if you are claiming that you are a partner in nation building, which means that you are assuming a responsibility to act in a public interest. Now, this is a very, very important and most critical, I would say, element of the professional firms or professional accountants for that matter. Some of us who are in service may say that this is something which is not applicable to me. But if you look at the code of ethics, this is very much applicable to everyone who are in practice or who are in services for that matter. Now, what does it mean? Responsibility to act in a public interest. And this is something which we need to think about. Are we really living up to this particular value statement? The question is this term, the responsibility to act in a public interest, is it an optional? Is it a choice that has been given to us? The answer is no. It is an obligation casted upon the professional accountants or any person who is in practice, that they have to necessarily act. They have a responsibility to act in a public interest. What does it mean? It means that, I cannot allow any commercial consideration to take precedence over my responsibility as an auditor, right? So if I say, if I get X amount of fees, possibly I'll sign something. No, that is not something which one can do. Or I also cannot go back and say that, okay, my fees is less on this particular engagement, and therefore I will not perform all the required procedures because I'm not getting paid, effectively for that matter. So irrespective of your commercial consideration, the individuals, the professionals are expected to act in a public interest. Now, I'm not too sure how much of this has been put in practice by practitioners. And this is the reason why I said, let's go back to the basic. This is the fundamental thing that we need to think about when we are. So people might disagree with me, say, people might say that, no, we are not running a charitable organization to act in a public interest. Uh, Fine, we agree or disagree or agree to disagree. That's perfectly fine. But I think this is something which is the most important aspect. If you open the code of ethics, the first thing that you will read is that auditor's responsibility to act in a public interest. That is the primary thing. That's the first thing that they talk about. And in all the audit methodologies, especially in the firms like ours, this is again being emphasized. The question is it only for India? No, this is global phenomena. This is just not for India. Responsibility of auditors to act in a public interest is something which is very well accepted, or that's how it's been drafted, both in the international standards of auditing as well as US gas or Indian auditing standard for that matter, right? Now, what does it mean? The point is that our responsibility as a professional accountants, our responsibility goes beyond satisfying the needs of our client. So every time we get engaged for providing any services, and one of the ways to navigate through these challenges is that every time we are engaged to provide any particular professional services, we need to question and challenge ourselves that are we restricting or are we limiting our work in the interest of client alone, or are we looking beyond that? That's something which is very important. And how do we do that? As an auditor, every time we are associated with any deliverables, any professional services, ask question, and we must avoid knowingly getting associated with any work or any professional responsibility where we know that the reports or the information that is getting signed are materially misleading or contains false information, or contains information which has been prepared without adequate due care, and informations or it reports which omits information or misleads to the readers of the financial statements or any other information for that matter. Now, this is something which is very, very fundamental. And I'm sure some of you must be thinking as to why we are talking about this, but this is the most important element if we really want to navigate through these challenges that we're talking about. If we don't do this, possibly we'll again fall in the syndrome. I keep hearing a lot of chartered accountants when we talk about, the profession. I've heard statements made by chartered accountants where they said, when the sun is shining, make your hay. The sense, make as much as you can when everything is in your favor. Don't worry about the consequences. There are individuals. So when we have such elements in the practice, and they believe that nothing is going to wrong, and whenever this happens, we'll take care of it. They are not only being absolutely careless, negligent, and taking a risk to spoil their own reputation, but people like them also bring disrespect and disreputation to the entire profession for that matter, right? So I thought it is very important. If we really want to navigate through these challenges, we don't need to innovate new things. We don't need to think about something very novel. No, I mean, this is a very basic, fundamental thing. If we do this, this has been there for many, many decades. This is going to be there forever. This is the foundation of our profession for that matter. So this is the most important element I felt personally, and I think responsibility to act in a public interest, we must debate, discuss, from a navigation point of view. What next? When there is a fraudulent financial reporting, when there are audit failures, when there are challenges on the work that we do, there are reasons as to why that happens. One, obviously, the own ethical level of the individual who is performing the audit procedures. And second, and I think majority of us would fall into the second category, is that we sometimes unknowingly fall into a trap, right? And it's very important for us to know as to what are those traps and how do we avoid those traps. This is very, very critical. And I just identified a few things and we'll discuss one by one, right? When some of you must have noticed that when the fraud takes place in the financial statements, it starts with a very small amount, very small thing, either the employee fraud or a management fraud. And we tend to believe that, okay, this is not very material, so we tend to ignore it. But then it becomes a habit of a management to come back and argue that let's leave this particular matter because it is not material, right? This is the first and most important starting point from a fraudulent financial reporting point of view, or falling in a trap of justifying wrongdoings or wrong financial reporting for that matter. So let's not ever fall for this concept of materiality, because it's very difficult for us as an auditor to know as to what exactly is the objective or idea behind using that materiality as a reason for allowing certain wrongdoings. That could be much larger issue, and therefore my humble request is that we should avoid using or allowing management to tell us to ignore things on the basis of, on the grounds of materiality. That's number one. Number two, always watch for the attitude of rationalization, right? I've heard this, and I'm sure many of you would have noticed this. And again, this is basic. This is a lot of people will say small fraud or a big fraud or a medium-sized fraud. If we go back and do an analysis, we will realize that 99% of the modus operandi of committing frauds is one and same. It's not changing significantly. This will remain same. I mean, people have only those limited, areas or limited ways of committing fraud. Um, it's it's not that there are new things or new innovation that are happening in terms of committing fraud. They are more or less same. Now, one of the, especially I'm talking about the management frauds. Now, one of the trap is that management will come back to us and say they will try to rationalize their actions, right? And normally they'll use the statements like, we are an organization providing employment to 10,000 people. There are 10,000 families who are dependent upon our work, right? And you need to understand, if you qualify or if you ask us to make the correction in relation to a particular financial statement item, this would lead to a lot of negative consequences, and therefore this will have an implication on 10,000 families that I am feeding, right? And they just try to patronize and say that, okay, I'm actually one of the key contributor in terms of building the nation. So there are various ways through which management will come back and try to rationalize the wrongdoings, and just be watchful of that, and let's not get ever carried away with those so-called rationalization. And I've personally experienced this in a number of scenarios where people will come back and take this as an excuse for seeking our approval for their wrongdoings. Another trap is that and we easily fall into that, is that the argument to say that this change or this particular transaction is just for this time and we don't need to do this again. It's only for once. I'm asking you to allow me to do this, right? But I've seen this. In fact, I'll just share one interesting story with you. One of our clients into infrastructure business long time ago, they had a situation where they never used to borrow money, and bankers used to be after them and say, okay, please take money. But they said, no, we have enough cash and enough sources to raise funds and we don't need money from you. But then the things changed. In 5 to 10 years time, the things changed in such a manner that this particular businessman or the business owner was entirely dependent on the borrowing alone, right? So things do change. So initially they might come back and say, possibly we are doing this only for once, and it's not something which we want to do it again and again. But then the business circumstances are such that if we allow them once, possibly it becomes a habit, and then it will become very difficult as an auditor for us to wriggle out of this situation. Because if we have allowed certain wrongdoings in a particular financial year, it will become very difficult for us to take corrective action in the following year, and this becomes a vicious cycle. So don't fall in a trap of saying that this is just for once and we are not going to do this again. And this is a very interesting trap. You will hear this number of occasions. And these are the arguments that they will bring to the table when you are discussing some contentious issue with the management. They'll say, we are expanding and we want you to partner with us in our growth, right? It's a very commonly used terminology with a lot of clients, a lot of management. These are all traps they use to lure. So said, okay, fine, if you allow a particular wrongdoing now, possibly you will get some more business. And we all think, at that point in time when people take the decision, everyone thinks that, okay, by allowing them to do certain wrongdoings, it's not going to harm them. It's only going to help them in terms of growing their businesses. And with their growth, possibly will also grow, right? Now, again, it's a big trap. Neither the management nor the auditors would realize when they actually get into that. But this is something which is very commonly used trap by the management, and they'll, especially when you are having a very discussion on some contentious issues, they'll bring this up to divert the attention of the partners or the audit team and lure them to say that okay, why are you wasting your time on such small thing? There's a future is very bright, and therefore you work with us and be partner with us. We are not here to partner with our clients. I mean, that's unless we realize this. it's going to be very difficult from a, navigating through these challenges for that matter. This is very interesting trap. Very, very interesting. Clients would come back once you identify a problem, once you identify that there are non-compliances, once you know that there are wrongdoings, and you present it to the client's management, very conveniently, they'll come back and tell you, fine, I understand, but we are doing this because of ABCD reasons, and we want you to find a solution for us. They'll put the onus on us. And unfortunately, most of the chartered accountants or professional firm, I think we fall for that prey and we think, okay, the client is in difficult time and we need to find a solution. So we become very creative in terms of giving them a solution without realizing the fact that that creativeness is actually going to come back and haunt us very, very badly in a years to come. Right. So this is another trap that people actually use to get things done from the auditors. Threat of removal, this is another risk. I don't want to discuss much on this particular point, but that's another concern that we have seen. Excessive fees or excessively lower fees, right? That's it's a very commonly used threat, very, very commonly used threat, that people will either give us a large amount of value, and then we think that if we lose that particular fees, it's not as at stake for me, and therefore we fall in that particular vicious cycle, and this goes on and on. We might be earning a decent amount of fees from the client, but then we are actually falling into trap without knowing easily. At the same time, there are clients who will purposefully keep a fee very, very low. And you know why they do that? They do that so that you as an auditor and a team feel that what is this kind of a job? Why are we working on this? In the sense, why should we spend so much of hours? So they don't want us to do a complete work, and they keep our fees very low. And there are instances where they would come back and tell you, you don't understand, you don't know how to do business. And they'll say, why are you wasting so much of time for this small fees? You should quickly close the audit and just move on. Not that they are your well-wishers or our well-wishers. They are basically trying to play with our mindset and say, okay, yeah, for such a low fees, why should I spend so much of time, and get the work done as quickly as possible and move on, and keep frustrated in terms of the lower fees. Undesirable perks, again, this is something which I'm sure you're aware. I mean, when the management wants to get certain things done from us, it's quite likely that we will be given undue importance, and we fall for it. Gifts and hospitality, I don't want to spend much time on this. This is something which is very common, and there's a lot of discussion about this in the code of ethics. The last point on this slide, and this is something which is very, very important. I would like everyone to pay attention to this and put this in practice, that we should never, ever miss any opportunity of communication with those charged with governance. It could be the board of directors, or it could be the audit committee, or it could be the owner managed company, whatever it is. If there are concerns in our professional judgment, if there are accounting issues, if there are auditing issues, if there are fraud issues, right, we might take a decision based on the materiality of the amount as per our standards in terms of whether that issue becomes a reportable or not. But never ever miss an opportunity of communicating this with those charged with governance. You have to put the ball back in their court. They should not come back to us at a later stage as to why you have colluded with the management and never brought concerns to the attention of the audit committee. If you are having this communication in writing in the form of audit committee presentation or a board presentation, at least we are protecting our interest to say that, okay, these issues were brought to the attention of the audit committee, and this was expected that the audit committee or the board of directors are likely to take certain decisions, corrective decisions in relation to that. So I am not saying that, communication with those charged with governance is a final, I would say, relief for us as an auditor. Possibly no, but it will save great amount of pain, from our perspective. So it's very important to learn this particular technique of communicating with those charged with governance on a regular basis, and not, shying away. I have experienced this personally. I've faced these challenges where management would come back and say, why do you need to bring this to the attention of the audit committee or board of directors for that matter? You, in a good faith, we might think, okay, this is something which is not very critical, we can ignore this, but there is a hidden agenda behind insistence from the management for not reporting such matters. So we need to be extremely cautious and judicious in terms of identifying as to what needs to be reported to the management or to the board of directors and audit committee, and what can be ignored. If we it might look like we are complaining to the board and audit committee, but still fine. So long as we put this in writing and communicate to them, that's fine. There will be some amount of saving from our perspective on that matter. So that's first element in terms of how do we navigate through these challenges by avoid getting into a trap, the various ways, and there could be many more ways, by which we could actually fall in a trap. We must avoid that. What next? I think over a period of time, as a professional, as an auditor, possibly we have got into too much of delivery, execution, closing the audits. We might have lost our focus or our sight on certain standard behaviors that is expected of an auditor, right? I'll not spend much time on this, but then I'll just quickly walk you through. And this is only a kind of a revision because, and again, this standard behavior, what I'm going to refer now is not something which is a newly discovered technique to navigate through challenges. These are again basics. This is all there in the code of ethics for ages together, and we just need to remind ourselves about this. The first thing is the integrity. The expectation is that we are fair in terms of our dealings with the client. We are truthful to our client and to our stakeholders to whom we are reporting. A second is in terms of the objectivity. This is again very important from a professional practice perspective, in terms of that we will not allow any kind of a bias in our professional judgment. You talk about anything, be it GST audit, be it the new accounting standards, be it the new business environment, we talk about COVID, everything, anything, I'm telling you, these are all connected to these behaviors. These are all the fundamental foundation, which should drive in terms of achieving the quality audits. Professional competency and due care. Now, this is very critical, and I'll spend a minute on this particular point from a discussion point of view. You see, it is expected that we as an auditor, when we accept a job, we make sure that we have a due professional competency in respect of a particular segment that we are accepting. So as an auditor, if suppose I accept an audit of an insurance company, right? Without having adequate knowledge of as to how the insurance company works and what are the challenges of the insurance companies, I think it would be a gross injustice on my part to even accept that particular engagement, right? Either I should have a skilled resources in my team, or I should myself be a skillful in terms of handling those complex engagements. If not, then I acquire the knowledge before I accept the audit. But I don't think most of the time people even think about it. We just simply go on accepting the engagements without really, making an evaluation whether there's a right skill set that is available to deliver the work, right? So this is something which is very critical, and both professional competency and due care. When we talk about due care, right, it's extremely important that, and this is not something new, again, as I'm emphasizing on this point, is that due care would mean that involving the right set of people at the right stage of the audits, right from client acceptance, planning, execution, and risk assessment and conclusion. We must have a right set of people involved in terms of delivering the work. Confidentiality, and lastly, the professional behavior. Now, these are the standard behaviors. I think it would be a great amount of favor if all of us go back and look at in terms of what this behavior individually really means and how we need to implement this behavior in our day-to-day activities. It can do a great amount of justice and good to the entire profession for that matter. Now, what next? I mean, of course, you identify the standard behavior, reconfirm the understanding of the standard behavior from the professional accountant, and the most important thing is that against each of this behavior, we need to identify in terms of what kind of a threat that are persistent or that are existing in our audit activity with reference to compliance with this standard behavior. And I'll come to that in terms of what are those threats, and identify, evaluate, and respond to those threats and apply the safeguards, right? So if supposing that we believe that there is an issue with reference to the integrity, or there's an issue with reference to professional competency in respect of a particular engagement, that's a threat in terms of complying with the standard behavior expectation of a professional accountant, right? So when you identify that threat, we evaluate the nature of threat and then put a safeguard in place. If you don't have a safeguard in place, then we better not accept such engagements which we cannot perform, right? Now, what kind of threats that are generally applicable in a scenario, and this has again been well discussed in the um, in the code of ethics for that matter. So first is the self-interest threat. Again, this is a, if we have any financial interest in the client, personal plus the family, that creates a self-interest threat, and there must be some measure that we must be taken to avoid accepting engagements where we have a self-interest threat. Is it that if there's a self-interest threat that we need to resign? The answer is no, not necessarily, but there are safeguards that we need to put in place, and the safeguards are again well explained in the code of ethics for that matter. The second threat, possibly from a engagement perspective, is the self-review threat. We maybe not applying or not paying adequate attention. And if you look at the NAFRA report, I think one of the things which has been identified very I would say highly talked about is the self-review threat, right? We cannot be auditing our own work, right? And if we end up doing that, if we have a situation where we have performed certain work, and we are also doing the audit of that particular work, there's absolutely no way. There's only one option: either we give up that particular engagement, or we don't do an engagement which is going to cause a self-review from an auditing perspective. Advocacy threat, again, very common. We don't understand the seriousness of this particular matter. I have seen instances where practicing chartered accountant or individuals or the signing partner on the engagement of a listed companies, they go and openly promote the purchase of shares of their client, right? This is absolutely not acceptable. We might think that it is okay, who is watching us, there's nobody to really track this, but it is going to come back and haunt us very badly. So there's no way that we can do an advocacy on behalf of our client. Promoting company shares is one part of it, but there are several such things that gets covered as a part of advocacy threat, and we need to be aware of that. Familiarity threat, I'm sure most of us know about it in terms of rotation of a partner. This is something which has been talked significantly post the Companies Act of 2013. This is something which is very commonly discussed about. Intimidation threat, that's another aspect. I'm sure most of us, even the large accounting firms, even big accounting firms, would face this very often, that there is a threat of intimidation by the management. The way they behave, the way they respond to the auditors, the kind of respect that they offer to the auditors is clearly in a way is very threatening. And people, out of just fear of not getting fired, a lot of times people keep quiet. And examples, I can publicly take these names, and there's nothing to hide this. I mean, these are the stories that I've heard about 3 or 4 companies. USL was one, Satyam was another one, and there's one company in Mumbai. I don't know take the name of that company. It's not the recent one, but so there, the promoters will behave with the auditors in such a manner that you don't feel comfortable raising complex and difficult matters with them. So when you have that kind of environment, it is not advisable that we continue with such audit engagements, right? Or we put in different set of people to perform the audit, but never ever get threatened by those intimidation of the senior management or the promoters for that matter. So these are the kind of, and if you, in your own experience, if you look at what kind of things that we would have seen in terms of a threat to the professional services, everything will fall into this 5 broad categories. Everything will fall into these 5 broad categories. There's nothing else. There's nothing new that one can identify, over and above these 5 possible threats, right? So we talked about standard behavior. We talked about what we need to do in terms of identifying the threats to compliance with the standard behavior. These are all the standard behaviors. Is 5 things that we're talking about. These are all mandatory, obligatory responsibility of the auditor to comply with, right? And everyone knows that there are possible threats to non-compliance of this particular standard behavior. So identify those threats and put a safeguard in place. If there's no safeguard, then give up that particular engagement. So that's again a very basic. There's nothing new that I'm talking about. Lastly, on this slide, never shy away from saying no. And this is a big problem as a professional we face. We don't say no when we have to say no. This is the biggest problem, and I'm sure every one of us would be in a position to relate this concept of saying no when you have to say no, right? This is something which is very, very fundamental. So this is happening maybe because of we are, worried that if we say no, we get fired, or there are different consequences of that. I tell you, I have personally experienced this. When you say no, you run a risk of, one, obviously losing the client, which is the biggest risk, and second risk is that you run a risk of being tagged as a person who only talks theory. You run a risk of getting tagged as a person who doesn't have a practical understanding, and you run a risk of being tagged as a individual who doesn't understand the business. These are very commonly used. So they are all terms they use to put an auditor in a defensive and to make you scared of saying no to certain situations, right? And this is again very, very common. This is not something new that I'm talking about, but what is important is that, are we saying no when we have to say no? That's something which is very, very critical. Right. Moving on to the next part of it, in terms of what is the solution for this? Training, and more training. Training for self. One second, I have a problem here. Training for self, training for staff, and training and education for the client. It's very important that we do this. If we don't, then we will continuously run a risk of having this, challenges to navigate through. There's no other way to navigate through these challenges. If you're not acquiring the required amount of skills for ourselves and for our staff, if we are not communicating effectively with our client in terms of making them aware as to what is our responsibility, what is their responsibility, nothing is going to happen. So then we will not be in a position to navigate through these challenges in an effective manner. We might be master of accounting standards. We might know all the complex accounting standards, accounting principles, interpretation. But if we fail to communicate and say no when you have to say no, it's not going to be of any use. So this is again a very basic and fundamental that we need to do from navigating these challenges. What next? Ganesh, when he spoke in his opening remarks, he talked about documentation. He said documentation, documentation, and documentation, right? But of course, when you say documentation, and he's very right, we might do a lot of work, but if it is not being documented to support our conclusion as to how we reach to that conclusion, it's a big risk we are running. And in today's environment, especially when we are talking about NAFRA, and let me just share with you my perspective on this. It is not necessarily that it should be true, and I'm not trying to scare anyone. I'm not trying to create fear for myself or for anyone. We are all in the same boat at this point in time. You see, today possibly we believe that NAFRA is going to review only those audits where there's a possibility of failure, right? But that's not true. NAFRA can pick up any audit engagements, even the best of the clients, the best client, honest client, where there are no issues. They may still pick up that if it falls into the category of NAFRA, selection criteria. The issue is if it has been selected for inspection, and if as an auditor we are not in a position to provide them enough basis as to how we have reached to the conclusion of true and fair view on the financial statements, the client may not suffer anything, but of course we as an auditor will still carry a big risk of saying that the audit was not performed the way it was supposed to be performed. And it's not only a question of what do you call reputation issue for the audit firm alone, but it could be a reputation issue for the client as well, because the world will say that the auditors have issued an audit opinion on so and so client without doing the audit the way it is supposed to be performed, right? So it's extremely important that documentation of right from the planning to conclusion is captured in a proper manner. So therefore, here I'm just referring to some aspects of the documentation. One, we must have the audit procedures documented, distinguishing between the procedures which we have designed to respond to the risk of fraud or error. If you look at SA 315, as an auditor, we have a responsibility at the beginning, at the inception of the audit, to identify if there are any risk of fraud based on our experience in relation to the client. And once we identify those risk of fraud, risk of material misstatement due to fraud or error, we need to design our audit procedures and capture it separately. And then there are general audit procedures that we apply in terms of the rest of the financial statements for that matter. So this is something which is very critical. We perform audit procedures using various techniques. starting from say inquiry, inspection, recomputation, confirmation, reperformance, analytical procedures. Now, we must ensure that our audit procedures are designed taking one of the types of the audit procedure that has been defined within the auditing standard for that matter. And let me also tell you very importantly is that inquiry is only a one supplementary procedure, but that cannot become a primary procedure. So we cannot simply say that I have inquired with the client in relation to impairment in goodwill, or I have inquired with the client in relation to impairment in carrying value of the fixed assets, and so on and so forth. Inquiry is a very, very basic procedure, but that can never become a primary procedures. So inquiry in collaboration with inspection, recomputation, confirmation, performance is perfectly fine, but inquiry alone is not an audit procedure and will not support us as an auditor. And as I said, we apply this concept of audit documentation and types of audit procedures for every aspect, every facets of the thing, that's starting from risk assessment, substantive testing, and control testing for that matter. Now, another important aspect I said in the beginning, when we talk about say planning, there's something called fraud risk consideration. Maybe in majority of the audits, possibly because of the familiarity with the client, because of the proximity with the management, because of our complacency to think that we know about the business and nothing can go wrong, we may not necessarily pay adequate amount of attention to the fraud risk consideration. But I say 240, which talks about the fraud risk consideration, and also there's a reference of that in SA 315. It is a mandatory procedure that auditor must identify if there are any fraud risk consideration that are existing in an organization. And the entire evaluation of fraud risk consideration is revolving around three things. One is that, is there any incentive in an organization or an audit client that you're working on? Is there any incentives for the employees or for the management to commit a fraud? Identify those characteristics. If there are incentives that exist, for example, for a listed company, the incentive is that if they show more profit, their share price will go up, and they have a lot of analysts who's running after them to show better profits, better results, quarter-on-quarter profits. And Satyam is a classic example of that incentive. The more you show the profits on a quarter-on-quarter basis, the management would make more money, the investors would make, the analysts would make more money. And so there is an incentive. So every audit, no matter whether it's a small or a big or a large or whatever size of the audit, fraud risk consideration procedures are mandatory in nature for us to identify if there are incentives that exist in a particular audit situation. And if there are incentives for people to commit fraud, then it is our responsibility to at least make an effort to identify those incentives and then design audit procedures in and around that particular aspect. Second fraud risk consideration is about the opportunity that exists for people to commit fraud. And the question of opportunity, and this is something which we miss big time in our audits, is that to understand as to what kind of opportunity that we're talking about. If the entity level controls and the activity level controls, both manual or automated controls, and today we are in an automated world. Every company is moving towards digitalization. Every company is moving towards using the electronic means of doing their business and keeping their financial records. It is so easy. It is so easy for them to commit frauds, and it becomes a lot more easier if, and that's where the opportunity is, it becomes a lot more easier for them to commit fraud if there are inadequate entity level and activity level controls that have been designed by the management, right? This is something which is very critical in every audit. Possibly not many of us are paying attention to this, and that is one of the reasons to why this leads to the disaster or corporate financial fraud reporting and so on and so forth. So every business, if there are inadequate governance control, if there are inadequate activity level controls that are there in your audit client situation, then that clearly offers an opportunity or provides an opportunity for management or employees to misuse those gaps and do a misappropriation of either financial reporting or misappropriation of an asset for that matter, right? So that's another fraud risk consideration that one must consider. The third one, rationalization. This is something which we talked about it, the commonly people will say, why don't you should be a partner in our growth. We are expanding, or I'm feeding 10,000 homes, and therefore I'm entitled to do what I'm doing. Right. So we might get carried away with that kind of attitude and behavior of the management, and we think, okay, yes, this guy is actually providing, meals to 10,000 homes. But then unfortunately, he might be a philanthropist. That's perfectly fine. But as an auditor, there's no standard or no procedure which gives us that entitlement to say that, okay, if somebody is giving employment to 10,000 people, they are entitled to do whatever they want. No, there's no such excuse that is available, right? So these are the fraud risk consideration one must always be aware and take into consideration in terms of designing their audit procedures. And lastly, this I'll end my session. While we talked about various things in terms of how do we navigate through these challenges of what we are dealing in the new era, there are few accounting standards which, in my view, are very critical for us as an auditor to be aware of and focus our energy and our efforts towards that. Starting with the related party disclosures. If you look at, in fact, yesterday I believe there was a a release of a forensic report on Diwan Housing Finance, and this has been done by Grant Thornton. And I was just reading that particular report, and I realized that the modus operandi of committing fraud is same. It's through multiple web of companies that has been formed, right? And one of the fundamental thing that people ask are the expectation of an auditor when it comes to the multiple web of companies or related party transaction is to understand what is the economic substance of those transactions. Why do we have so many companies? Why can't we run the business from one entity? Or why is that there are transactions with multiple entities within the group? This is a very commonly used method of committing fraud. So related party disclosures and the entire standard for that matter is very, very critical. For both, you will have an auditing standard on related parties, and at the same time, there's an accounting standard on related parties, both under Indian GAAP and Ind AS for that matter. Second piece is business combination, a very, very easy tool for people to commit fraud. Very, very easy way for management and for knowledgeable people to misuse the standard in terms of creating fictitious goodwill. And as you know, under Ind AS, goodwill is not subject to amortization, but it is subject to test for impairment, right? So it's quite convenient for people to manipulate the numbers in such a way that the business combination is accounted with certain motives rather than with the substance of the transaction. That's one standard that I think all of us need to be very, very careful in our audit situation if there is some. Share-based payments, again, very, very complex. A lot of companies, a lot of management would like to avoid any cost being recorded in the financial statement. Both business combination and share-based payments are not a very straightforward scenarios. These are situations where there's a lot of judgment and a lot of estimate is involved, and judgments and estimates are prone to material misstatement through fraudulent means, and therefore it's extremely important that we acquire adequate knowledge about these standards to make sure that we are not taken for a ride by the management and by their advisors for that matter. Financial instruments, extremely complicated one. It's not easy, and from the standard behavior that we talked about in terms of professional competency, it's very important and essential that all of us understand this particular and study it carefully. Now, the question that may come up is that, is it possible for all of us to be familiar and knowledgeable with each and every complex accounting standard? The answer is no. I am not master of financial instruments. I know very basic about financial instruments. I am not a guy with whom you can engage in a very interactive, intriguing conversation on financial instrument, because this is not my subject, right? But then how do I comply with this? I comply with this by making sure that I have an expert within my organization. Every time there's a financial instrument issue, I'll go back and talk to them. So if in a scenario where in a firm we don't have enough skill set with the financial instruments, please don't hesitate. Go back and talk to people and understand from them as to in terms of what exactly this animal is all about, because financial instruments can make or break the financial statement big way, and depending upon the size and complexity of the business. But this is a very critical standard for that matter. Next one, consolidated financial statements. A lot of you will say, what is so big difference about consolidated financial statements? Very simple, line by line consolidation, identify minority interest, identify unrealized profits and gains, and just prepare the financial statement. No. Under Ind AS scenario, it is extremely well documented, well designed, and it covers almost every situation where one need to identify whether a particular investee or whether a particular entity with whom your audit client is dealing with is a subsidiary or not, depending upon the control assessment. And the control assessment, I must tell you, it's been beautifully designed as far as the standard is concerned. So if you look at the appendix of 110 and the standard itself, it gives you a lot of information in terms of where we need to consolidate a particular subsidiary. Objective of the management would be in certain circumstances to exclude certain subsidiary companies from a consolidation because those subsidiary companies losses are not making meaning or make sense from their financial reporting point of view, and their endeavor would be to mislead us by keeping those subsidiary companies away from the consolidation perspective. Next one is intangible assets. Again, extremely judgmental, extremely subjective in terms of what to be capitalized and what should be charged off. So that's another complex accounting standard one needs to be familiar with. And lastly, on the operating segments, again, there is a reason as to why. I mean, see, when you talk about fraud risk consideration, there's an incentive for management not to disclose operating segments, right? Because if you disclose operating segments the way it is supposed to be disclosed, possibly some of the businesses which are not doing good or not doing well get reported in the financial statement. So there's an incentive for management to not comply with the operating segments, and therefore we need to be fully aware of as to what is the operating segment and how this should be applied in a client scenario. So I guess broadly, this is what, and as I said in the beginning of my presentation, I'm not going to talk anything new. I'm not talking about the GST or a COVID scenario. Ganesh has referred to it from his perspective. But I guess these are the very basic things. And if you look at throughout my slides, I've talked about, let's go back to the basics. If we go back to the basics and take care of the basics, possibly we will be building a very strong foundation to navigate through any challenge for that matter, be it an accounting challenge or an auditing challenge in our audit client situation. So with that, I would like to hand it back to Pankaj sir for any question, answers, and if there are any comments. Thank you.
Thank you very much, Sanjay bhai. Yeah, thank you very much. If you can just एक 2 minute के लिए share screen end कर सकते हैं क्या?
Sure. I'm done with this. So just give me a minute. I'm trying.
Top में रहेगा. Stop share. Yeah.
Done.
Thank you very much. And on behalf of Hyderabad branch of SIRC of ICA, I take pleasure in welcoming a beloved Central Council member and the most sought after guru of all of us, Sri MP Vijay Kumar ji. I also welcome Danyavas Sharma ji. Okay. So quickly, I'm not qualified person to give closing on what you have done, Sanjay bhai, but always I used to hear back to basics, because whenever I used to not middle the ball well or whenever I used to not play well, my coach said, go back to basics, go for the knocking. Okay, watch the ball. And I was remembering all my childhood days, but very beautifully covered. And as if it was, for most of us, it was as if we are just sitting and talking to client. And many of the things you got us back to. I'll just stop here. Sanjay bhai, the questions will just take up after MPV sir's address. And welcome MPV sir. Thereby you would like to say anything before I just request Rajam to introduce sir. Yeah, okay.
Pankaj bhai, let MPV sir is my guru also, and the other side is Sanjay bhai, who is my elder brother, and all others are the most loved people. And having Sanjay bhai today on the screen and Ganesh speaking today in the opening remarks and MPV sir when he is there, I would like to first listen to him, because as a student you can only go back and cry before a guru, but not talk before the guru. So I would like to wait for his address, and then I'll just talk 2 minutes, not more than that.
Thank you, Dev. May I request Rajam to kindly introduce MPV sir, and then MPV sir can take over.
Hello everybody, welcome back. It's an honor to introduce MP Vijay Kumar sir. मेरे भी guru hai. I am also one of the prodigy of MPV. It's very nice to see you again, sir. Asking me to introduce MPV sir in 2 minutes is very, very difficult because I can go on hours together, but I'll stick to the job given to me. MP Vijay Kumar started his career as head of investment banking in company secretary, Sundaram Finance, and from there on, he went on to Yugandhara and Ram LLP, from there to SIFI as a CFO, from where he's won a lot of awards and accolades as top CFO, National Award for contributing to the financial accounting, and other prestigious awards. MP Vijay Kumar has been a council member of the Institute of Chartered Accountants of India from 2016 to 2022. He's been chairman for various boards like Accounting Standards Board, Valuation Standards Board, and Digital Accounting and Assurance Board. Vice chairman for Expert Advisory Committee, Financial Review Reporting Board, and other local Committee on Accounting Standards for other local bodies during various years. He's a nominee member of SAFA Committee on Accounting Standards, National Financial Reporting Authority ex officio, and Quality Review Board nominee member. And he's been a member of almost all the boards associated with the institutes. To name a few: Company Law and Corporate Governance Committee, Ethical Standards Board, Internal Audit Standards Board, International Affairs Committee, and so on. And welcome, MPV sir. It's always been, right from the year 2001, it's been a pleasure to hear to you. So we'll have that pleasure again today. Welcome, MPV sir.
Over to you, sir.
So are you on a mute by any chance? We can't hear you.
Volume.
No,
No, sir. I think no, because I'm unable to see the audio being off. So maybe you have to increase the volume of the system, or again the Indian Bajaj scooter, log off and log in.
No, I think he might have not accepted the audio button. Only because of that, the audio is. So we can say on Pankaj Bhai that we are not able to hear. He is able to hear. We are also.
He's able to hear. If I quickly just show.
No, he's logged off. He'll come back again.
पंकज भाई आप फोन करके बात करो साहब से.
नहीं, he'll come back.
Log off करके log on.
He is logged off. क्या दया भाई? Good evening.
Good evening.
Now, yeah.
Is it audible now?
Perfect.
Yes,
Yes, sir. Loud and clear.
Not the voice what we wanted to.
Okay. So thanks, Rajabal, for that introduction. Greetings to all. Trust all of you are safe and all your near and dear are healthy. My very sincere thanks to Daya for the invite. And I'm extremely happy seeing his evolution closely over the last 15, 16 months at the council, and the significant contribution he's been making in all the tasks which he has been assigned to, more particularly in the peer review board, the Digital Accounting and Assurance Board, and he's played a very significant role in the self-service portal going live. I can't imagine the institute today without that portal being live, and thankful to him and a few of other colleagues who were part of his batch who made that a reality. My thanks to CA Pankaj Trivedi and managing committee members of the Hyderabad branch for inviting me to be part of this program. The century on sticky wicket is an amazing achievement, and I'm happy to note that the 99th session will be addressed by the current vice president and the incoming president of next year, and the 100th by the honorable president tomorrow and day after respectively. Let me now speak on financial reporting and navigating through accounting and auditing challenges in the new era, with focus on the run-up to the audit in 2030s. I recognize a very good friend Ganesh also as part of the panel, and thanks for stepping in for the opening remarks. And I heard Sanjay Jain since 6:20, I think, 6:20 or 6:25. From there, I've been listening to him from when he was in slide 5 onwards. So very happy to hear him. In fact, he started off well as to why it is called a new era. He set the context so nicely. And it was almost a good refresh of SA 200 and the repeated emphasis on back to basics. And what Pankaj nicely summed up, that whenever you are not middling the ball, you just go back and check where the basics are. I will consequently spend my time on what I see based on my experience as to how the audit profession is evolving in the new era. Maybe I'll take the liberty of visualizing the profession for the next 10 years up to 2030. Sometime in the 2030s, if not earlier, most of the functions involved in a financial audit will be automated. We are all aware of this, and the team size will drop by half. Automation, artificial intelligence, machine learning will do a majority of accounting work, and it is only logical that this has an impact on audits. At the Digital Accounting and Assurance Board, where there is the vice chair and is contributing very actively, the institute takes cognizance of this change which is happening and will happen in a much bigger scale to ensure that member skill sets are geared to this new reality. The accountants and auditors as individual professionals are not going to die because they need to carry out the maelstrom of change. I'd like to highlight 7 trends which I see as the changes for this decade, which the session topic says new era. Trend 1 is the rise of automation. Ever since the Industrial Revolution kicked off more than 175 years ago, the human fascination for technology has multiplied. Companies have automated a lot of their manufacturing and service processes. Over the years, these have affected the old professions of accounting and audit too. I know there must be a few senior members here on the webinar today, and I recall distinctly my articleship. From the 13 columnar sheets to AI-driven data analysis pack, we have come a long distance in the last 3 decades. Let us not associate technology only with large public listed companies. While I speak over the next 15-16 minutes, good amount of my conversation is focused around the SMEs. In fact, it is the smaller entities that are far more nimble. SMEs which are characterized by a high degree of centralization in decision making and deficiency in internal controls too will embrace technology as they step into the growth highway. Auditors too must keep pace with time and embrace new audit technologies. Since these tools and audit laboratories can be expensive, small medium firms will use cloud-based tools on pay-per-use model, and all the members here must be aware that at the institute, through the committee of members in practice, we have designated a significant corpus to make available tools for enabling audit. Some work has happened so far, but there's still a journey to perform. Intelligent process automation, which will be the next upgrade from RPA, robotic process automation, has come to stay as an advanced data extraction tool with its inbuilt AI module helping in decision making. Such changes compel us to evaluate our competency levels. And as auditors, what is our preparedness to do it in the areas of our specialization, be it audit, tax, compliance, or whatever. From the institute, and credit to Daya on this, we have the digital competency maturity model for professional accounting firms version 2.0, which was released last year, which helps accounting firms make this self-assessment. This tool, DCMM, Digital Competency Maturity Model, provides implementation guidance on how far one should move ahead. However, being competent and matured enough to handle digitalization is just the start. There is a long way to travel on the road to execution. The winners will emerge from those who assess themselves, make the necessary shift, and go the full distance on technology. Trend 2. We will have to define audit quality. Please hear me carefully on this. Lots of action on this will happen in the near future. Members should be aware about the institute having set up a center for audit quality as well. Judging audit quality is both subjective and challenging. It is beyond compliance to standards and processes, adherence to legislation, and zero defects. Today, we are unable to define quality. We go back to an oft-quoted statement on photography. I don't know what's good quality photography, but I know when I see one. Similar to the stand we have taken on what constitutes audit quality. And this stand must stand. In the next 2 years, we must have a generally accepted definition of audit quality. And as I mentioned, at the Institute, we have set up this Center for Audit Quality, who has initiated steps to establish a framework for audit quality and, similar to DCMM, an audit quality maturity model as well. Aside from auditors, the clients too must take cognizance of this development. If that happens, it will add cheer to the auditors' efforts and minimize the audit expectation gap. Thankfully, audit reporting has slowly moved from template-based reporting to more entity-specific reporting. I am personally excited on SA 706, emphasis of matter and other matters, and SA 701, key audit matters, which have been key differentiators. These two standards, amongst other standards, these two standards actually make the audit so very exciting and very entity specific rather than a template-based reporting. These have certainly helped improve the quality of audit and enhance the relevance of audit opinion to users. I'm sure many would recall one of the purposes of issuing SA 701 and the parent ISA 701. One of the key reasons was to ensure relevance of audit as a function and audit opinion to stay relevant. CARO 2020, which is exhaustive and looks onerous, is also a step towards reducing the expectation gap. It is crucial to define expectation gap and identify the reasons for it. Expectation gap is the difference in perception between what the public think auditors do and what the public wants auditors to do. This gap hasn't narrowed with time, and there are 3 reasons for it. Reason number 1, knowledge gap. What auditors do is different from what the public think that auditors are doing, and this is the knowledge gap of the public. Professional bodies like ICI, and this is a global phenomenon, it's not restricted to India, it's globally, communicate with audit firms by making available updated information on changes in regulation and the need for change. Audit firms in turn interact with clients and sound them out on these changes. But somewhere down the line, the message the public receives, particularly the investor community, is feeble and not forceful because there's a perceived absence of wider reaching platforms. Reason number 2 is performance gap. what the auditors are supposed to do differs from what they actually do. And this is known as performance gap, which Sanjay had articulated in his presentation so beautifully. Let us underscore one aspect. IC as a standard setter has been continuously responsive by updating standards on accounting, audit, and ethics, and by providing implementation guidance. In fact, the new code of ethics, which came effective from 1st July 2020, we did not hesitate to implement it despite the fact that it was going through pandemic, because as an institute, we believe that was a step in the right direction. And what was considered good, it was felt that we shouldn't postpone it. Instead, we should make available the good for the benefit of the profession and society at large. The action on lax and inefficient auditors is not as fast as some wish it to be. And so the public perception is one of laxity. The last reason number 3, evolution gap. What the public wants the auditors to do and what the auditors are supposed to do is the evolution gap. Society is unmindful of what the auditors are supposed to do. It is true, regulatory changes are taking place at a breakneck pace. In fact, if you look at the last 7-8 years, right from New Companies Act to Ind AS to GST to RERA to insolvency, I don't think any other profession in the world would have been subject to this level of regulatory framework changes. And I'm so proud that we as members of the Institute have been able to cope up with all of these changes, which have happened so very rapidly in the last 8-9 years. New legislations, new standards, and revision to existing ones have been coming in at a rapid pace, and it will not stop. The auditors are also not lagging, as I said, in compliance with these amended laws. Despite that, the public expects audit to evolve in a way as to prevent the failure of the audited client. We in the profession must look at this expectation gap and narrow it down. The winners will emerge from those who can bridge the performance gap fully and the other 2 gaps as much as they can. Trend 3. A separate grammar for a separate class of companies. Standards are the grammar for both accounting and auditing. There will be a different set of financial reporting guidelines for less complex entities. We currently have Ind AS and AS. AS is getting revised. The last time it was updated was late 90s or early 2000. World has changed a lot, but standards haven't. So those standards have to change. And in order to take care of the micro entities who largely prepare financial statements only for tax purposes. So those cases we are looking at, or rather evaluating some alternatives. It's early stages as of now. The auditing standards now apply to all audits irrespective of the nature, size, and structure, whether it is a 5 lakh crore company or a 50 lakh company, or it's only tax audit. It is the same set of audit standards which apply. This practice is leading to auditors to focus on compliance and not on judgment. In the years ahead, we'll most likely have a different pack of standards for auditing. Such a package would make documentation and risk assessment disclosures easy. Judgment will be back in auditing, and judgment is core for auditing. It cannot be a compliance-based auditing. It has to be judgment-based. Limited internal controls and management override characterize several small medium enterprise audits. These are demanding situations that affect efficient audit performance. Worse still, These situations come with low remuneration, and Sanjay spoke about it. If an auditor assumes that examination of an SME client carries lower engagement risk compared to that of a large entity, such auditor is mistaken. SMEs often scale at a high growth rate and do not have robust internal control systems and other governance oversights to manage the pace of growth. It is nobody's case that work should be done only to the extent of fees received, and Sanjay did speak on this as well. But if truth is to be told, that's an overriding reality in at least some. We will see audit firms agree upon and insist on a minimum fee commensurate with this nature and size of engagement. Winning firms will be the ones who realize the engagement risk in every engagement, small, medium, or large, and who either cover it or seek a price for it. Trend 4, fraud detection is auditor's obligation. Here again, I seek your patient listening. Fraud will be the biggest challenge in future, and given the current pandemic and the economy contracting by 10%, the fraud risk will be the highest. In fact, I would caution, please don't get me wrong, give me a little fatherly status on this. Young practitioners in particular, I don't think you would have got this kind of an exposure. I would strongly suggest higher amount of skepticism in these times, and until detected, you will not even know that there is a fraud happening. And this year, 2021, all businesses across all sizes and all nature, the fraud risk is extremely high, and I would caution each of you, particularly the younger members, to be extremely careful on this. An auditor of financial statements has a fraud detection responsibility, especially if it leads to a material misstatement in the financial statements. Remember, SA 240 lays the primary responsibility for preventing fraud at the feet of management, but the auditor is responsible for providing reasonable assurance. The truth is that there are certain limitations in audit, and even if the audit is planned appropriately, some material misstatements may remain undetected. If we want to be in the attest function, we must learn to live with this reality and look at the challenges. Under the Companies Act, the auditor has to report the fraud to central government, but it does not require the auditor to carry out a roving investigation to detect fraud. A reading of the Audit Standards and Companies Act throw up a couple of aspects. First, an audit engagement requires auditor to express a true and fair view on financial statements, but such a commitment does not envisage that all frauds would be detected. Second, a fraud not being exposed does not mean that the auditor has not carried out his engagement correctly. When no fraud is reported or comes to light, we don't compliment the auditor for a job well done. But at the faintest hint of a scandal, the stakeholders descend on the auditor with a barrage of questions, and we in the audit profession must never lose sight of this reality. While auditing, an auditor maintains the mindset that fraud is always possible. When the auditor is a fraud examiner, he begins his or her assignments with the belief that someone is committing a fraud and affirms that belief unless the evidence shows no signs of fraudulent activity. Often, there have been concerns about independence of auditors. Sanjay did talk about the 5 threats. He explained those 5 threats. Those arise in the context of appointment methodology, a significant part of audit market space being occupied by few firms, high cost of audit of public interest entities, and increasing complexity of business operations. Also, one would perceive changes in the personal ethics and value systems of the persons in the audit profession because of increased materialism that the world has gone into. There is also increasing awareness that the line between the profession and business is thinning. For a pure Chinese wall to be built, audit firms must focus only on certifications and assurance. Everything else should be done under a different entity that maintains an arm's length distance. This is what is being discussed elaborately in UK. Mere departmentalization won't do in this regard. And Sanjay also talked about that self-review threat in this context. The earlier firms understand these technical niceties and make necessary adjustments, the faster they will step into the growth track. Trend 5, Code of Ethics. The professional independence should be felt, experienced, and be visible, however tough that may be. This is the hallmark of any profession, and this is what will bring in public trust. As the profession of medicine, ours is a profession of trust, and so our work must be executed without a hint of interdependence. The new version of Code of Ethics, effective July 20, is a significant large document. By imposing restrictions, in particular for public interest entities, the threat of independence is sought to be reduced. For all of this to be succeed, we need to follow it both in letter and spirit. After all, it is easy to bend the law without breaking it. Some of the provisions might appear onerous, but if we have to pass the test of public scrutiny on independence, we must follow the Code of Ethics in word and spirit. Independence is a foundation for trust in an audit opinion, and it is worth walking that extra mile to protect the respect for and enhance the stature of audit profession. As the profession evolves more fully, we'll see a lot more changes to the code to keep it current and modern, not archaic and ancient. The firms that move the distance from being good to great will practice both value and ethics in thought, deed, and action. The penultimate trend, Trend 6, global trends will affect India. I would like all those who are practitioners of audit to keep a track of all these global trends which are happening. Two reports merit attention: the Sir Bryden report in UK and the report of the International Forum of Independent Audit Regulators, IFIR. At the instance of the UK government, Sir Donald Bryden undertook an in-depth review of audit quality and effectiveness. And in December 2019, less than about 10 months back, his report was placed in public domain, and it contains path-breaking suggestions calling for extensive reforms for accomplishing improved audit quality. Here are some of the suggestions to give you a heads up. 1, redefine the purpose of audit. The purpose of an audit is to help establish and maintain the deserved level of confidence in a company, its directors, and the information they report, including the financial statements. In fact, Sanjay was talking about public interest and all. In fact, there's a huge debate happening internationally on whether auditors should take care of client interest or public interest. There's a huge debate happening on this. In my mind, I'm very clear. Any work which is done because of a requirement in statute, because law requires you to do, public interest is paramount. Companies Act wants you to do audit. Income Tax Act wants you to do audit. Those cases, only public interest matters. In the case of private engagements, where a client engages you for doing due diligence for an M&A. Those cases, client interest matters. Otherwise, this debate is still going on internationally within the bodies of IFAC as to how an auditor should cope with this particular conflict. The second recommendation of Sir Bryden is to introduce the concept of suspicion. We as auditors exercise professional judgment and appropriate skepticism and suspicion throughout the work. Auditors must act in public interest and consider interest of all users. Recommendation 3 is to enhance informative nature of audit report. Auditors need to create continuity between successive audit reports. Just look at this gentleman where he's talking about. Between previous audit report observations you gave and the current audit reports, he wants to continue to maintain, provide greater transparency over differing estimations, perhaps disclosing graduating findings, and call out inconsistencies in information made public. There's a similar set of initiatives by IFER. In its 3-year strategic plan, IFER is focusing on achieving significantly improved audit quality on a global basis, and it has revisited the role of audit committees in different jurisdictions and is actively reviewing whether audit committees should select the external auditor, determine the fees, and assess audit performance. And a set of audit quality indicators are also under evaluation. The audit firms that are 2030 ready will keep a constant vigil on the global best practices and developments and internalize them to extent possible. The last of the trends, trend 7, anywhere, anytime, anyone. This was waiting to happen. The infrastructure was in place and the competence was there. It only needed a push and societal acceptance. COVID-19 gave us just that. Even as audits have gone beyond paper and pen phase, and with global audits already being done from remote locations, the next jump will be carrying out reviews from anywhere you are, office, home, or a cafeteria. As the world steps into a new order of freelancing as opposed to full-time employment, as travel becomes increasingly cumbersome, and as Generation Z steps into the workplace, audits from anywhere and anytime will become the norm. Footfalls in client place will drop, just as all of us have witnessed. Footfall in audit offices have dropped during the last 20 years. With AI, no data entry, blockchain, big data, ML, world of accounting is changing. People will not log data, machines will. Already many accounting applications today can put the smartest of analysts to shame with the speed of execution and dexterity of operations. Neither accounting nor auditing is going to disappear. As long as there is cricket, there will be scorekeepers and umpires. Accounting is about scorekeeping. Auditing is about umpiring. What's changing is how frequently we want to see scores, in what mediums we want to see, and how much of documents can be digitalized. The firms who will lose out are the ones who are not seeing the gathering storm and not getting prepared for it and become the Kodaks of the world. Have an influential culture, modernize, and use emerging technology, and you will win. Today is perhaps the best time in history to be in accounting and audit, as the world of work around us is changing incredibly right before us. Thankful to each of you for your time and patience in listening to me. Happy to interact further with you. Stay safe, stay accountable. Thanks, Daya and Pankaj, once again for the invite.
Thank you very much, MPV sir. I think, Pankaj bhai, let me speak.
No, please, please, thereby my मुंह बंद कर लिया, बेफिक्र
नहीं. MPV sir, I think I just go back to my days of 2001, 2002 when I used to sit in the class. I was always in my entire schooling a last bencher. but only for your classes, I used to sit in the second row. And I'm proud that, even at this distance, I am able to sit in the front row and listen to you so effectively and fantastic. That's the only thing I think a person, a ASB chairman can only speak these things. A technology man can only speak these things. I am just carrying your legacy of DAB, which you have given me. Fortunately, yes, I am a vice chairman, but I have all the rights and authority given by my council colleague, Manu Agarwal ji, to do a lot of things. And that is how from the DCMM1, which you made out, we have reached to DCMM2. So there are certain fantastic, pathways you have created already. When we were deliberating in the council, even today, Pankaj Bhai, just let me share with you one very important message. That DCMM was introduced just as a particular tool in a form of book, which we converted in DCMM2 as a module. And from module, today the decision has been taken in the council that, there will be a certificate which will be issued to chartered accountant firms who are actually going to comply with the digital competency maturity modules. Just imagine the kind of fast moving approach might be when 2017 MPV sir has put DCMM1, but by 2020 we are coming out with DCMM2 and taking it forward. And as you rightly said, sir, Center for Audit Quality, and it is time which has come where the rating of the firms is going to happen based on their quality parameters. And one of the most important thing which is going to be there is adoption of technology, because I personally, I was expecting one statement to come from you. I think you can elaborate in one of the sessions, sir. Because of this technology, the auditing standards and accounting standards are going to change. That is something which we need to really understand. The impact of technology is going to change the revenue recognition criteria, might be measurement criteria, and many disclosure criteria going forward. So this is going to be one of the major changes when you talk about a firm of 2030. By 2025 itself, we are going to see a lot of new reporting requirements. And the kind of expectation gap which is you talked about on Quarter 2020 is the first move by this government to showcase the gap which has been actually, they wanted to demonstrate that very clearly on the paper. And most important part, undoubtedly, from the technology you started, technology you ended, you touched upon on the entire ethics and the entire compliance part. Sanjay bhai, I can only tell you one thing: you are lucky. You are brother. That's the reason I am saying that MPV sir has heard you, and he used all your topics, discussions in the entire closing remarks, which he, special address which he has given. Honestly, the robotic process automation, sir, as you are aware, world leaders we have become by coming out with the research paper for the first time in the history of 72 years in ICI, that ICI and ICAEW come together and do a research study. Friends, I can only tell you, we have walked ahead in a multi-fold level, kilometers ahead. India is moved in a total different tangent. They didn't had examples, so they had to come to India to take those examples of adoption of technology in their accounting processes. And rightly said, sir, with this technology, I think the competency building which is there, not only about the firm, but also about the people, is need to be understood very well. I think it is high time. We are late. If you have not understood, we are late. And I think, as you rightly said, the firms which are going to be 20, 30 firms are those firms which are actually going to adopt this thing today. Otherwise, the only thing which is going to be there is, yes, you will be a chartered accountant undoubtedly, but with a specific frame, in which we are going to work on. The major chunk is going to go with other firms. Sir, being the convener of member and student services, which is the backbone of the entire institute, you are aware 72% of our practice firms are proprietary concerns, which is actually an alarm to this institute and the institute members. When we are going to talk about newer technology, newer ways of doing things, newer way of reporting requirements, I think time is going to come where seniors are going to get older, and that experience is not going to get passed on to the youngsters. So it is right time, sir, where I talk every time about this. It's the right time that we collaborate. The experience and the speed has to come together now. I think the days are gone where we used to get sentimentally attached with our names and all. But it is time that, collaboration, coming together, making it large is going to be the only answer. That's going to be the only answer of all the points you have addressed in more than one way, sir. And yes, as you rightly said, fraud. I would like to talk to all the members at large, not only in my Hyderabad chapter, but at the national and international level. Sir, you are aware, in Digital Accounting and Assurance Board, we are going to be the first institute in the world which is going to come out with the forensic standards ever thought about. So this is where our institute is already moved, sir. And it is time that this message has to come down to our members at a larger level. When you talked about frauds and their importance and the impact which is going to come in is going to be very crucial and critical. Sir, I think the foundations which you people have laid over a period of time, I am a person who's come for the first time in the council. I am really enjoying to, take that wagon forward and ensure that whether it is sweat or blood, let it bleed, no problem. Let it sweat, no problem. We are going to work together to ensure that 72 years of our legacy is not taken aside. We always were relevant. We are always going to be relevant. We have put our best. And I still remember your last council meeting where the presentation was being given on the accounting standard adoptions by the proprietary concerned partnership firms. It is actually going to come in a larger reform. And when you talked about Sir Braden report, specifically the expectations, I think we have already come there. He is talking about it in his report, but sir, more than one ways India has adopted a lot of things on the financial reporting aspects. Sir, the IFC, which has been talked about today, is nothing new, sir. I think every public sector undertaking over a period of time had IFC implemented in other form, other name, but only, yes, the color is changed. So Pankaj bhai, the only thing which I would like to say is the pitches are different. You have to be playing a normal game. You have to play a natural game. You have to be on the basics, but always have to remember that the pitch is going to change. I think that pitching is every time going to be different in every circumstances. The responsibility which has been given to chartered accountant, the responsibility which is given to chartered accountant in tax audits, whether it is statutory audit or GST audit, we are actually playing a role of quasi-judicial power. We are playing a role to ensure that the public interest directly or indirectly is protected. I think that is what we need to really understand, in the sense when you're talking, you are putting a signature, and that means everything. That means everything. So today you cannot compare yourself with a lawyer or any other professional. You are a chartered accountant who can actually sign that financial statement, only one person. So I think the responsibility casted. Sir, I think the time which is going to come, we are going to be ready. I think the new breed is going to come in a different style and manner. But yes, experience cannot be ignored. And we want such people to continue giving us, a different kind of mindset. Sir, fundamentally, debit is a debit and credit is going to be a credit. It cannot be different. In whatever we would like to say, it is going to be the same fact. If a person has to pay a tax, might be 3% or 5%, doesn't matter. The person has to pay tax. When you talk about compliance, it is going to be reporting on the face of balance sheet or in the notes to account. It is going to be the same thing which we are going to report. It cannot be different. Income is an income, expenditure is expenditure, asset is an asset, liability is a liability. If we go back to our fundamentals and ensure that the way that is being put forward is understood time and again in different style, I think that's more than enough for all of us. So really thankful to you that you have come, and real pleasure to listen to you. I'm really excited in more than one ways in my mind. Sanjay bhai, thank you very much for coming into Hyderabad after a long time gap. But again, whatever sum up has been done by MPV sir gives a very clear message. Though I was sitting with some other activities, I am in Delhi right now and working on certain very, very critical aspects. I missed out, but I think summing up of MPV sir gave me all the answers. So the shortcuts of formulas of problems he always showed me. So that continued to be there. And Ganesh bhai, thank you very much for pitching in so quickly and agreeing to fill in the gap when we all were sitting in the council meeting. you agreed to be there in the beginning and ensure that things are going good. Pankaj bhai, a great inning you are playing. 98 run is just a march two steps ahead. Two steps more to touch that 100. And I think the entire team is doing a great job. And we look forward tomorrow's presentation where Aniket is going to be there, Vice President sir is going to be there. Hopefully, time is given to me. I am going to be there. And the next day is going to be with President and two big other shots of our institute who are going to share their knowledge and experience. Thank you very much for giving me an opportunity.
Yeah, Pankaj, before
Yeah,
you
yes, Ganesh bhai. Yes.
MPV and Sanjay, and thank you very much. Actually, you really brought in what you should be visualized. I had one question to both of you, right? In Sanjay, when he talked about presentation, he talked about a related party. And related party, all frauds happens through these entities called a related party. In India, related party, which was actually originated from 2013, has been diluted. Even today, it is completely diluted, right? So therefore, the ability for us to continue to relate to what MPV talked about was about the fraud risk factor. Probably people have not understood what is a fraud risk factor, even in a COVID situation. Because this is something where, because even in our auditing standards, when you talk about SA 240 about fraud risk factor, for a COVID situation, what is a fraud risk factor? I think if we get through that essence of it, whether it's an overstatement of a revenue or an understatement of an expense, or falsifying in terms of putting something because you're under losses, so therefore book everything under losses, those sort of an understanding is what is more required. And I think because both of you are there as a part of this and you're bringing the center of excellence that you're talking about, and especially on the quality, can we have these understanding? Because this is where we have to go above board, because related party transaction is not what is defined under a standard. Related party transaction is not defined by a act, but related party transaction is beyond what. Can you throw one for you, Sanjay, and one for MPVs? If you could throw that light, because that is where the crux of the whole thing we are talking about. Back to basics. Over to you.
Ganesh, thanks for that question, and I will not even make an attempt to respond to that in front of Mr. Vijay. I think it is for Mr. Vijay Kumar, and to be fair, you will get a more robust and solid response based on his experience. I would let Mr. Vijay Kumar respond to you. Mr. Vijay Kumar, over to you, sir.
Thanks, Sanjay. Kind of to say that, but I think you brought in a nice live example of that forensic report from the Devang housing exam. Forensic which was done, and we know that I've been in practice for a little over 10 years, and of course my audit experience is largely small medium enterprise one, and we have found that wherever there are related party transactions, I'm not against related party transactions. In fact, I believe that related party transactions are very normal and they can happen. What is required is a good governance process and an appropriate reporting so that users and other stakeholders can understand that these transactions have taken place and they can form judgments on the same. Somewhere, many times, whether it is the management or audit, it starts with a fundamental assumption that related party transactions means there is something wrong. The moment you start with that thinking or the fear that somebody will think it is wrong, you start doing certain things to cover it up, which is actually not required, Related party transactions, people can actually be very upfront about it. In the context of audit risk, what happens is, it is the governance process failure for related party transactions, which actually increases the fraud risk. With due respects, I'm also on the board of few companies and all. I also am a KMP in a company and all. I do know that we have these three pillars of governance, I don't think we have achieved a very good balance at the board of directors level and at audit committees level. And many times those conversations are rushed up, hushed up, and things like that. They all are on the basis of trust. Everybody believes it's happening correctly. People don't. People feel shy to think that there's nothing wrong in getting validated that everything is nice. So if you were to do a dipstick of the time spent by audit committees or boards, that answers everything. That answers everything. And here it has been largely the compliance-based approach, which actually has been the problem. So as Ganesh, as you said, it's not about the related party list, which is there in Companies Act or whatever. It's all about how you are able to form judgment. Audit, again, I spent a little time saying that you need to differentiate between compliance and judgment. If you see audit as compliance, most likely it will fail. But it is all about judgment, how much you are able to take judgment. I think that is core on that part, Ganesh. You had a second question. The second question you had was regarding
on fraud. You were talking about the fraud because that's the most key aspect.
Overstatement of revenue, understatement of expense. These are things which we are familiar with. But I think in a situation like this, the bigger fraud comes from the supplier ecosystem and other ecosystem where you could get in bills which may get accounted without your knowledge as if they're correct bills. Maybe the organization also believes it is correct bills. Organization also believes. In fact, Sanjay said in one of his slides, most of the times that he talked about the materiality and he said most of the times it starts small. So what happens is these invoices, small invoices and all, and either because of materiality or other reasons, you miss out on those, but they all actually are frauds getting into the system. There are some cases where sales are happening, but they're happening through agents, sales returns not getting accurate. So there are a combination of those. It's not just about estimates of revenue or estimates of expense. These kind of fraud risks are very high because people are starved of cash now. The vendor ecosystem and others. And if they know that a particular entity has a weaker interkernel control system, they will attempt to push all this inside. And those are pretty difficult to detect. When it's a large organization, it has a different kind of difficulties to detect. The smaller one, another set of difficulties to detect. So those are the issues which are there. In fact, one important message I would like everybody to take note of is the IBC cases. If you look at all the IBC cases, until a year back, everybody said they were good. And suddenly they've gone bad. And most cases, banks have taken a haircut as large as 60, 70, 80%. And which means assets were just not there. And that's a very sad state. And I don't think as a profession, we can shy away and say that we don't have a role there, In fact, that's why I said this small, medium entities, the 10 crore company, 50 crore companies, they're also high risk ones, where many cases people think there's a particular way of doing business and we will not be too much visible so we can do the way we want. Those risks are pretty high. So the fraud risks are beyond just income measurement and this expense understatement. Particularly from the external environment, the kind of fraud risks are pretty high, which will be put on the entity. An entity will not be even able to detect that it has happened. There could be collusion with some employees and all those. I don't want to elaborate beyond that, but I'm seeing that happen in the last 3-4 months. I'm seeing a lot of indicators. That's why I wanted to caution the members here. And on caution reminds me one thing. Young members in particular, I think the private companies and all, you must be auditing in the month of September, October now. I'll again borrow what Sanjay said. Going concern assessment is not easy. This is the 4th downturn I'm seeing in my career. And in the previous 3 downturns, I have not had exposure to applying going concern as much. But now that has become a reality. how to apply going concern and form a judgment on going concern is not easy. A little bit of lost hair and gray hair, and as Daya said, that experience does help, because in the pressure to complete audits, retain bank lines of credit, etc., you might sign off on going concern, but within 4 or 5 months, entities can wind up. Winding up of entities can happen for multiple reasons. It can be stress on the business, or the promoter himself might feel, I'm already age 60, my children are in US, I'm done, this COVID has impacted me enough. I don't want to run around the banks and all that stuff. I might want to lift up. So going concern can get disrupted because of that as well. And we should not become pawns in that. We should not become pawns in that. So my request to younger members, please don't mistake me. A little fatherly figure status, give me that. Uh, on going concern, don't hesitate to consult senior members. They will give you little guidance on what kind of questions to ask and the tough questions to ask, because you have to connect with the global economy, supply chain sector, and the entity. And where GDPs have shrunk by 10 to 20%, to say that everything is fine, I'm sorry, that is not the case. So it requires lots of judgment and documentation also to do. So please take caution there. Sorry for this long answer.
No, thank you so much. Actually, you actually elaborated very well. So one day we will have discussion on internal control, directors, and as a panel, we'll have more time to talk about it. I know it's almost like 8:30. Pankaj bhai, it's all yours. Thank you so much.
Thank you, Ganesh bhai. And in front of MP sir, then I'm booking you for that also.
No, Pankaj bhai. Not only him, you have to book
MP sir, Sanjay bhai, and all. Yeah,
all.
Yeah, Ramkumar, if you're there, kindly share the screen. And I think Vijay is MP sir. We are now going to have only green tops with lot of balls swinging from left to right and then reverse swings. Okay. Sir, thank you very much for coming, sharing your views. In a virtual atmosphere, we can just give a virtual thank you note to you, sir. Thank you. Kindly accept it. We'll have it sent to you. And for Sanjay sir, also Ram, if you can, Sanjay bhaiya, sorry, Sanjay sir, you're my bhaiya always, but thank you very much. It was an excellent thing. It was very interesting. So thank you very much to both of you, as well as Ganesh for starting it brilliantly. Deepak, may I request you to propose vote of thanks? Thank you.
Thank you, Pankaj sir. Great persons, great lessons, and great guidance. What else we can ask for? Really blessed to have attended the session and empowering myself personally. And I hope each one of us who have attended this seminar will have a concurrence with me. I am sure our attempt to empower our fraternity with today's program, with stalwarts speaking on the subject, would have been fulfilled to a larger extent. Listening to Ganesh sir has always been unique. Every address of his give us a new perspective to the overall discussion and give us a new thought that yes, we also have to do and think like this as well. He repeatedly insisted that documentation is only your tool to answer all your questions for any time in future. C.S. Sanjay sir, the man of the match today. Sir, you have really and extremely covered all the challenges and make us aware of them. You have given us the right guidance and shown us the route that we should not fall into the trap either knowingly or unknowingly and have to be vigilant enough. Sir has emphasis that the challenges may be new, but let's go back to the basic to manage the threats. What to say about CMP Vijay Kumar sir? Sir, listening to you have always been exciting and resourceful. The guidance he has given in a short span of 15 to 20 minutes by taking us through the 7 trends was really noteworthy, and we need to practice them in our day-to-day professional life and prepare ourselves for change. Sir, the flow of session was like outstanding, like you have just plugged fruits of your decades of experience and shared us, you have plugged fruits of your decades of experience and shared us with all of us. Having the perspective in the end by C.A. Dayaniva Sharma sir was like having icing on the cake, and he has rightly highlighted few other important points on this subject. With folded hands, I, on behalf of entire managing committee of Hyderabad branch of SIRC of ICI, extend extreme thankful to Central Council members CA MP Vijay Kumar, Sir, CA Dayaniva Sharma Sir, CA Ganesh Balakrishnan Sir, and CA Sanjay Jain Sir for taking out their valuable time and addressing Hyderabad branch members on such important occasions. I also take this opportunity to thank each and every individual, more than 200 plus participants who has attended today and spent time with us. Friends, you have been honoring us every single time all through this journey, and we hope we have done justice for your time. I also thank Chairman Pankaj Kumar Trivedi, immediate past Chairman Bhanu Narayan Rao YB, Treasurer C.S. Chinasitaram Reddy, SICASA Chairman, Chairperson C.A. Rajambal for their contribution and completing successfully today's program. Friends, I request you to kindly join us tomorrow for the semi-final match, that is the 99th session for the day 4 program enlightening the series. The chief guest for the program is Vice President C.R. Nihar Niranjan Jambusaria sir. Special address by immediate past President C. Devraj Reddy sir. The topic is Journey of Digital Transformation by our favorite speaker C. Aniket Talati, and our Central Council member Dayaniva Sharma sir will be speaking on Digital India and digital compliances. Till that time, I request you to kindly take care, stay indoors. Jai Hind, Shubhratri, good night.
Thank you.
Thank you, sir.